LOAs that have been signed. Dilip Buildcon is another one which is in focus on the back of an LOA, 0.5% up move there. A whole host of order wins from a Thermax, Railtel, GR Infra, Seagull, JNK India, KNR Constructions, as well as Enviro Infra. So mixed reaction, but it's KNR and JNK which are seeing some smart moves on the back of order wins in today's session. The breadth overall in terms of movement is also pretty narrow. You're not seeing those wild swings either on the downside or the upside, but clearly it's banks who are taking the focus. IT as a sector as well, Alex, if you go to see, because of that rupee movement, is a sentimental move coming in terms of the IT index as well.
Yeah, Hiral, but it's still as a pack down as much as 1%. You said it though when you said that the banking index is the story of the day, because that index as a whole now down close to 2.5%, and practically all the constituents of the Nifty Bank are trading in the red. Pull that up, actually. Pull the constituents of the Nifty Bank up, and you will notice that the worst hit at this juncture is Axis Bank, followed by Kotak Mahindra Bank. You have IDFC First Bank. You have State Bank of India, ICICI Bank, HDFC Bank losing ground, but not to the extent of the other private sector banks, which is Axis and Kotak. ICICI Bank actually the best of the pack right now, which is down as much as 1.7%. HDFC Bank down 2%, and that's saying something, right? Let me go across to Kush Bora first, just to get an index view. If we're down as much as 1.3% at the open itself, 300 points taken out, and 22,500 being tested at this stage, and the Nifty Bank under considerable amount of pressure, 2.5%, what is the call right now?
My conviction on going long on the markets, that was pre-market open. It's just gotten a little stronger now with this kind of fall. Let me just give you a couple of data points rather quickly. The weekly RSI on Nifty is now below 24 in the last 20 years. This is the third lowest, and the only other two occasions were the 2008 global crisis and COVID. So we're as low as that, and typically we've seen a rebound once the RSI on the weekly setup hits 30. So we are now at 24. So like I said, we're towards capitulation. On the NSE 500, stocks below 200-day moving average have now crossed 400. Every time that happens, we see a rebound. And most importantly, the reason I say that today's move right now at open is important is because this is the second leg of a positive RSI divergence. In a very simple word, the Nifty is below or at the previous lows, but the RSI is not. And guess what? You look at a lot of sectoral indices, be it Nifty Bank, be it Nifty Auto, be it Nifty Real Estate, just to name a few. There are these positive RSI divergences popping up. Now, of course, things could go south if matters escalate and, everything goes for a toss from a geopolitical standpoint. But given as things are right now, I take this as a positive sign, and I reiterate the fact that the risk-reward ratio from here on is starting to look very, very attractive.
Okay. Let me pose that question to Milan Vaishnav and maybe add another perspective to it, Milan, which is that if you are also of the opinion that the risk-reward looks favorable from this stage, then would you play that with an index strategy going long, or would you look at some of the names that have been beaten down significantly that can potentially give you a better risk reward than a play on the benchmark?
Well, I have a couple of more things to add than over and above what Kush just said. First of all, India's index performance overall as against the global equities, I believe that as very rightly pointed out by Kush, we are seeing some very early indications of some bullish divergences on the lead indicators, which may not insulate us from the downside, but they definitely make us very resilient. And the amount of damage that we may suffer if things escalate would be much lesser than what the Asian peers would or the global equities would. And going ahead from here, if we compare the relative performance of India vis-a-vis, say, MSCI Asia ex-Japan, we may still be relatively underperforming, but we have seen now initial signs of improvement of that relative performance as well, which will translate into our markets over the coming days and weeks. So what I'm trying to drive home a point is that we might decline if the global equities decline, but the decline would be much lesser. We are now moving towards more resilient performance. And if we have to play the market, I would still be a little bit on the safer side. I would play it through the the index rather than specific stocks. That is point one. And second point, coming to Bank Nifty may continue to see some stock-specific shows, but overall relative performance is likely to take a backseat because that index has rolled into the weakening quadrant of the relative rotation graph if you look at the overall sectoral rotation. So yes, I feel that risk-reward ratio is much favorable going onward from here.
Wow, okay. We got some serious bulls here. Milan, just hang on. We'll take in what would you play it with, but we know Parag Thakkar likes to play it via banks. Parag bhai, good day to buy into Axis, HDFC, ICICI.
100%. This is a one-time treasury loss. One-time treasury loss. How much you can... already stocks have corrected so much. But they are ICICI Axis are trading at 10 PE. Okay, 1.5, 1.6 times price to book now. HDFC Bank also.
Sub 1.5 times
Yeah. Axis to below 1.5 on FY28.
Even HDFC Bank, right?
HDFC Bank 1.6, ICICI Bank 1.6, and for ICICI Bank for 2.3% ROI you are getting. And asset quality is very good. Even my challenge exercise is even for Axis Bank asset quality is going to improve. I think Citi has also mentioned this in their note today. So I think the valuations are absolutely compelling. This is a one-time loss, and of course there will be many other measures to protect rupee, and that might hurt banks a little bit here or there, like this measure, which will be a temporary hits. But I think everything is in the price, apart from one fact that if crude goes to 140, 150 due to and stays there, then of course there is a completely different picture. Then you have to be on 50% cash.
Got it. Okay. Jamin, thank you so much for joining in today and giving us your thoughts. Really appreciate your time this morning. Well, guys, I think...
Sorry, just the point that Parag bhai would still be at 50% cash.
if crude is off, if all bets are off.
So then all bets are off. Then world is heading into recession. Sure. What are we talking then?
Got it. Okay. This is good. This is good to know. Jamin, thank you so much. Milan, a word on some of the consumer durable names, simply because that's the cohort where a strong summer might not hit demand as much as a very high ticket item, because people might think twice before buying a very expensive piece of real estate, maybe even an expensive car, but an air conditioner, a fridge, an electric good is almost a non-negotiable now, because not that the prices are really steep. What do you make of a Voltas, a Blue Star, some of the EMS names like Amber Enterprises? Are any of these showing signs of bottoming out?
Not really. I have a neutral outlook on them. There is nothing on the charts that would either trigger a sell from the existing position or a fresh entry into them. I have a very neutral view on them.
Okay, and Milan, you mentioned that you are extremely bullish at the levels that we are at. I'm guessing all of that bullishness comes with a stop loss. If you had to buy one name as a 3-month or a 6-month positional trade, which one would that be? 1 or 2, whatever?
Yeah, I would first like to stick with Oil India. I expect at least 10 to 12% upside from current levels. That would be my one pick. So with a stop loss of 4 to 5% from the market price, one can easily expect 12-15% over 6 to 7 month period.
Okay, we'll leave it at that. Milan, thank you so much for joining in and giving us that perspective. Oil India, oil upstream names comes in as a positional call these days, simply because the market would want to believe that oil prices could stay higher for slightly longer, and therefore oil upstream and the capex thereof could benefit earnings for those companies as well as the ancillaries. But the predominant question remains that is there some green shoots at the valuation numbers of some of the consumer durable names, simply because some of these purchases might become non-negotiable. Air conditioner companies, for example, are also seeing some parallel relief, as some reports suggest that maybe LPG supply issues are just starting to ease a little. We'll get first-hand confirmation on that in just moments from now. But first, let me try and get my colleague Puneet to tell us whether indeed there are multiple reports of some of the supply chain issues and power issues bottoming out. Puneet, are you hearing that?
Well, seems to be that case, Neeraj, at this point of time. And there are 3 key points to note here. Now, one is, of course, that the LPG supply constraint had hit companies PG Electroplast being an EMS player and in the AC space had notified exchanges on March 9th of LPG supply constraint, and because of that, the stock had seen a reaction. Post that, we've seen over the next 10 days or so, company come out with an update that they are looking at alternates and substitutes at this point of time. So, they had specifically mentioned that they are looking and spoken to analysts about oxyacetylene as one of the key alternatives, which is a highly inflammable material which helps the brazing process within the AC manufacturing space. So that was one. And that has sent some relief to companies even in the AC space, the likes of Umber, the likes of Blue Star, and also the others like Voltas. So the other aspect one will be on this conversation, but also what has been the inventory filling in this quarter 4 of FY26 will be something to watch from the management of Blue Star as well, because you're seeing a decent summer uptake coming in because temperatures have been flaring up. So those will be the two key things to watch, and anything on raw material will also be helpful from this conversation.
Let's try and get that. Mr. B. Thiagarajan, MD of Blue Star in our studios. Mr. Thiagarajan, thanks so much for taking the time out. Tough times, I reckon.
Interesting times.
Interesting times.
On one hand, a very bad and challenging year is coming to an end. One more day to go. It started with a very bad summer season and a GST-related interruption. Then the trade wars related supply chain issues. There was some momentum picking up and building up to the summer season. Then this war. And so we were looking forward to ending the year to a reasonably good revenue numbers. I think the room air conditioner revenue shortfall over the previous year would have been only 5%. In the sense the industry had not lost much. But in terms of profitability, it's a question mark. Then moving forward, summer is yet to pick up in a big way. It's not like 2024 summer season. And so I am not so much worried about it. I was listening to your discussions on the LPG supplies. I think it is coming under control. There will be a period, I think, depending on what is going to happen, there may be an interruption. I don't think inventory is an issue. I am worried more about the market sentiments and to what extent price hike can be passed on.
Is there a worry on the market sentiment? I mean, thus far, at least the brokerage notes that have come out are saying that or investors who go and visit on-ground channel checks are saying that the consumer sentiment has not been hit very badly thus far. Do you differ there?
Invariably, it will happen. Today, they are not seeing the pressure, basically because inventory that was built at old prices are there. The price hike is to the tune of around 13%. See, 5% comes out of energy label change, around 8% due to input cost material, excluding plastic. And the styrene, polystyrene prices are going up now. So let us imagine that is not necessary at this point of time. So the moment they see the prices are higher, and it all depends on when this Middle East crisis will end.
Mr. Thiagarajan, I just want to get a sense of the timelines, right? Because the last time we had spoken, you'd said, and this is before the conflict, so you had said that you were looking forward to a build-up of certain demand from the dealerships because prices were expected to go up. So I'm trying to understand the timeline of events from that point to this point. The prices have increased, and has it only been that 13%, or is that the latest round that is yet to take place?
No, December 2025, energy label change is going to commence from 1st January 2026. We are allowed to bill to the dealers, and the dealers can buy that product and sell till that inventory is lost. So therefore, the dealers end up buying. That price increase due to energy label change, like to like. Strictly speaking, let us say old 5-star is becoming a 3-star at this point of time for argument's sake. The price remains the same only, but there is a new 5-star now with a higher energy efficiency which will cost more. So, but the consumer will see 3-star to 3-star. So, therefore, that was 5% increase. The dealers will pump in their working capital to keep that so they can keep selling in January, February, March, let us say. But then the input costs went up. So, that build-up started happening in January end. 8% is the average cost increase. So, 8 plus 5, 13 will be for the new inventory. Sure. So, which means from February, whatever you bill will have to be at 13, but obviously there will be resistance because inventory is already in the market. So, primary billing was not happening. March, it is supposed to happen. Okay. So, all manufacturers have announced this is between 8 to 10%, all are saying more I need. So, the dealers will buy only if it is sold out, and that sellout is happening. But the real inventory at a real price hike is yet to procure, which is the timeline is March last week now and April. But still the summer has not picked up in a big way. So if you see the map, it has been raining here and there, raining here and there. But the direction is that this summer will be good for air conditioners. Broadly, it should happen. Let us make an assumption. What should happen? I should grow by at least 25 to 30% in order to project a real growth. Because over last year is not. Neeraj had pointed out some point of time, anyway be good. Plus the price increase of, let us say, not 13%, one could pass on 8%, one would have really seen a revenue increase of that 8% itself. So, strictly speaking, good summer season is 25 to 30% growth should be there. Then only I will say it's a good summer season. But so far, it is not happening. So, sentiments play an important role. It is not the real normal growth alone. Plus, I should pass on price increase to the extent possible in order to maintain the direction of 8 to 8.5% of margin.
Yeah.
So, fingers crossed. You have to wait and
fingers
watch.
crossed. You've given a very interesting calculation as well when you talk about what Blue Star will have to achieve to actually show real growth, right? You're talking about 25 to 30%. That's the best case scenario that all of us are looking at. What is that worst case scenario that you will bake in? Because earlier we've already spoken of concerns, why the markets were not that bad. You've spoken about a market sentiment which is not supporting as of now. It may support, it may not support. What is that base case scenario that you will look at, the worst case scenario?
At least 15% over last year.
Okay. So
worst case.
Yeah.
Worst case.
So 15% over last year is the worst case scenario. And does that also bake in the risks when it comes to inventory management? Because inventory, as you mentioned right now, you're still sitting on inventory which is the old pricing. Your new inventory has to still come in. Yeah. So that one point taken into consideration, because if that does not get offloaded, everything gets haywire. Two, your input cost pressures, because a lot of your raw materials are imported. So how are you dealing with that aspect? Because I remember you were looking at conversations with Hindalco as well, specifically to procure copper locally. So if you have to pull this entire gamut into consideration, the bear case impact on margins, the bear case impact on revenues or growth you've already given us.
One correction. My inventory will be current. It is inventory.
Dealer, correct. But if the dealer inventory is not sold off, I'm sure.
So therefore, I'm not. That's why I'm not so much worried about LPG interruption.
Okay.
In fact, if some production cuts are going to happen, it should not really matter. Keeping in this mind, because you will be able to anyway produce 20% more rather than carrying a 20% more inventory. So at this moment, the production disruptions are not an issue for me. The issue is temperature should go up, consumer sentiments should not get deteriorated. And right now, these raw material prices are taken into account already. Going forward, the plastic and intermediaries are going to push up the prices, or the steel is going to push up the prices. That is a worry for the festival season. The summer is taken care of. I will worry about the consumer finance, given that 40% of the consumers will buy through consumer finance. If the interest rates are going up, that will become an additional burden. It is, one looked forward to a very great summer season, which you can propel the operations ahead.
Yeah.
But this war has changed the situation.
Just just quick follow-up to what Hiral asked you, which is your worst case scenario is 15% revenue growth. But I just want to ask whether you're accounting for, in that 15%, a full pass on of the prices or no?
Is this 15%,
At least
volume growth?
75% of the price increase would have got passed on.
Is this 15% volume growth or sales growth?
Revenue growth.
The volume growth.
Oh, volume growth.
Very category. So therefore, the sales growth could actually be higher, sir, because the MRPs have gone up.
It can be 23, you say, because 8% could be the increase. See, the blessing in disguise is the consumer will not feel that 13% burden compared with the last year, because 10% is a GST reduction.
Okay.
Yeah, I hear you. But so net, Mr. Thyagarajan, what you're saying is that the bear case growth of FY27 or FY26, as things stand right now, is between 20 to 25% revenue growth.
For the summer season, yes.
For the summer season or for the year, sir?
For the summer season.
And therefore, how does the year shape up therefore? If let's assume the conflict comes to an end, but therefore?
Conflict comes to an end, the full year growth should be 20 to 25% over last year. But even if the conflict comes to end, I think it is going to leave quite a bit of pain.
And sir, how much in a year like this does the summer season account for overall annual sales?
40%.
40%.
I have a question about...
But in Blue Star case, you have seen last year that we could manage well because we are just not dependent on B2C alone, and we are a B2B player as well. The good news is data center demand that is helping us to maintain the growth momentum.
So you're saying the weatherproofing strategy that you have for data centers and factories, will that be able to nullify to some extent the impact of the room ACs, the sentimental risks that we're looking at?
You rightly said, to some extent it cannot, because
what will that extent be? That's what I'm saying.
Market is significant, right? The question here is, it will grow. There is absolutely no doubt about it, given our penetration situation. Unfortunately, the situation is nobody is able to predict what is going to happen in terms of many things, and therefore I am being cautious. I am of the view FY27 will be far better than FY26, but one cannot take for granted it is going to be a super duper year. That's all I am making a statement. And the B2B part of the business, whether it is commercial air conditioning or whether it is data centers, factories, this can offset to the extent of, let us say, ballpark figure is 50% of a room air conditioner business profits if it is a failed summer season.
In terms of processes, and I just want to address this from a technical standpoint, what is the dependence on LPG? And there are a few manufacturers that are looking at alternative processes to tide over this time. Is that something that is possible in your business?
Possible, it is being implemented. First of all, it is used for two purposes. One is the brazing to join the pipes and other parts. The other is the powder coating. So in powder coating, there are other solutions available. You can use a DG set, and there are attachments to that. Quickly, people are installing that to move forward with that. And in case of brazing, there is some oxyacetylene method that is available. But the supplies are available. It's not an issue. At least in Blue Star case, we have not come across any interruption or stoppage. And alternate methods also, we are keeping it ready.
Is there a difference in the costing of the alternate methods? Does it move the needle too much?
No, not at all. It isn't.
Okay.
See, I'm again, I hold a different way. I'm not worried about the supply chain disruptions, but the market sentiments and consumers going out and buying. Kerala, for example, is doing very badly.
Because of rain?
I think the sentiments there of the Middle East immediately it is more than 30% degrowth compared with last year.
Understood.
Yeah. Understood. Well, let's hope this tides over soon. But thank you so much, sir, for joining in today.
Thank you. It was a pleasure meeting you all. Thank you.
Thank you, sir.
Thank you so
entirely
much.
ours. All right, that's Blue Star. And now let's go across to my colleague Jasmeet, because Aequs is setting up a manufacturing footprint expansion plan in Karnataka. Jasmeet fills in on the details before we get the management. Jasmeet, over to you.
Well, thank you for that. The company has been in focus lately on the back of the MOUs it's been signing with the various government. Last month they signed it with Tamil Nadu for 1900 odd crores, and today we have the management to discuss more on the MOU with the Karnataka government, where they plan to invest 2,800 odd crores over the year of next 5 years. While the company to set up manufacturing facility and expand the overall operations in Karnataka, basically in Hubli and Belgavi region, where they want to increase the overall aerospace product manufacturing. While further, if you look at the overall portfolio, the management do see that they have seen a good growth in aerospace, and they also believe that the consumer segment of them grows faster than the aerospace going ahead. If we look at the key outlook by the management, it remains positive, where they see that the shift towards becoming system level contributor when it comes to different segment. Further, they also make a note that the aerospace growth is expected to grow at roughly 20% over and above the current growth going ahead. Further, they also note that the long-term EBITDA margin guidance of over 20% in the long run, and expect the overall consumer segment to grow faster. In Q3 also we saw that the overall aerospace grow at like 38% on YOY basis, while the consumer grew at 150 odd times. So it's some wait and watch of how does the overall manufacturing pans out going ahead, and what a management plans to further expand the overall consumer segment going ahead.
Thanks so much for that, Jasmeet. And there are some landmark victories for companies in this space. So lovely to get in Arvind Meligri. He's Executive Chairman and CEO of Aequs E. Johnson right now to talk about the here and now and the future. Arvind, great having you. Are you in the US or are you in India, Arvind?
I'm in US, Neeraj.
Oh, okay. Well, I'm presuming it's too late for you, but thank you so much for agreeing to talk to us. And I wonder, just before we talk about your individual expansion plans, Arvind, do you reckon that all that's happening around aerospace and defense leads to a more high-tech, high-degree sourcing or procurement of parts from companies like Aequs and others within this Indian aerospace and defense system?
Well, I mean, in overall, the opportunity for sourcing more exists for India. If you really look at it, we're only 2% of the global supply chain. We are going to be 10% of the global market just on the commercial aerospace side. And on the defense spend, we are one of the largest, increase in the spend is happening as a country. I think the both will bode well for the aerospace and defense as an industry overall for India. And I think it's a complex geopolitical situation, but India as a market, India as a geopolitical location where we are, will end up spending more money on this, both the industry, aerospace and defense.
Arvind, would that be one of the reasons, aside of stated goals post-IPO about the expansion plans? Tell us a bit about the expansion. When does it come on stream? What does it lead to? And is it possible to predict what it will lead to in the current landscape of changing economic and geopolitical situation?
Well, I mean, the investment is predominantly geared both on the aerospace and the consumer side. And some investments have already gone in. For example, we are investing close to 2,800 crore in the both consumer and aerospace and consumer together. And out of that, in the consumer side, especially it focused on the consumer electronics, about 800 crore is already invested into this, into Hubli cluster. And the aerospace side, we are investing about 1,300 crore over 5 years. And that's pretty much, if we generally look at our revenue to capex ratio is 1.5 to 2 times. So that predominantly gives you the direction where we are heading with respect to the growth coming out of this. And we feel very confident both the aerospace side and the consumer side, consumer electronics especially, where we stand, are both huge tailwinds we have. where we need this investment to capture that market share.
Arvind, good morning. Hiral on this side. You mentioned about the aerospace division where categorically, I remember from the previous conversations as well, where you've mentioned that you are pivoting from a precision component supplier to a system level defense and aerospace platform. With the kind of exports that you have, with the kind of partnerships that you have with, Israeli companies, German companies, and Ukrainian partners, are you seeing a shift that's already started to happen much in advance? Because the anticipation was that revenues from this aspect will start flowing in FY28. But with the geopolitical situation on ground, how have things actually changed?
Hiral, thank you for. We just want to clarify. I just want to clarify the current investment. What we're talking is predominantly focused on the commercial aerospace, not necessarily on the defense side of it. Defense is specifically the UAV side. What I talked about systems level is investing specifically in the joint venture with Ajna, with the Axel partners and the Vegas Defense. It's focused on the UAV market. Definitely, it is and also focused on India defense. And obviously, the globally what is going on right now is definitely going to drive the acceleration in that area also. And we feel very strongly on that. That's why, this announcement happened even before this war broke out. But this is, we believe in a long run, it is still a 28 plus kind of a revenue opportunity in there. But what we are talking current investments, which Neeraj brought out, has been an investment which is continue to add to our revenue currently as we produce right now, as we speak.
Okay. Arvind, hi, good morning, Alex here. A couple of points that I want to ask, and they may be slightly shorter term in nature, but I think this is something that everybody is asking various companies also like yourself, right? Which is that you have a 90% exports exposure right now. Are you seeing any hold-ups in terms of some commitments that you might have had that where maybe some of your clients are saying, hold off right now and we'll come back to you in a bit? So conversion of certain conversations that you were having, is that taking a little while? And two, because of this kind of exposure that you have to exports and the generation of revenue in foreign currency, is there a tailwind that you're currently enjoying with regard to the depreciation of a currency, or do you hedge some of your receivables?
Yeah, taking on the first question, obviously the cargo capacity has diminished, especially air cargo, with underbelly cargo being evaporated kind of out of the Middle East, which used to be a big carrier for quite a bit for India. And obviously that has put a little bit pressure on the total pricing for the logistics cost on the air logistics, and also constraints on the capacity. But it's manageable. It's not something, it's a big percentage of our business in terms of the cost. Actually, logistic cost is not a big percentage of our business. So customers are fully aware of it and they are willing to support those things. And I think there's a disruption, I would say, more from the material flow perspective. Sometimes we see, although there may not be anything immediate, maybe a quarter down the road, we might see some of the, especially on the consumer side, toys, we see the pricing, especially on the polypropylene and ABS price shoot up quite a bit because they're all feedstock is all oil that is impacting. But definitely the customers are taking the burden of that. So it doesn't really impact our position, but it is just a pain in the neck to deal with continuously on this because we don't know the exact pricing. It has to be passed through. It happens on a monthly, quarterly, sometimes with the customers, but it's a process. And coming back to the second one, your currency, we are naturally hedged. We don't really do any hedging because we have a lot of imports also in dollars, or our customers pay us in dollars. Also, our imports in dollars. So I think there is definitely some amount of tailwind, whatever the margins are, apart from the material and equipment what we buy. And that's in general should be a tailwind for us and overall as the currency depreciates. But we don't factor these things in our planning. So we take as they come because we are naturally hedged. Sometimes it goes either way.
Okay. Well, Arvind, interesting use of term, the pain in the neck. You didn't use a term that somebody else from that geography used just a couple of days back. But yes, it is a pain, I can imagine. Thank you so much, though, for joining in today and giving us your thoughts. All the best for the quarters ahead.
Thank you.
Well,
Thank
that's
you.
Aequs, and we'll have a conversation with them post the quarterly numbers are out to have a sense of the numbers. Most companies will be in a silent period right now. That stock is doing okay for itself this morning. Is this the time to deploy cash though, is the key question, right, that we've been asking everybody. In a chat with Ganeshram Jayaraman, who's the MD and CEO of Avendus Investment Managers, I asked him whether this is the right time to do that. Listen in to what he had to say and where is it that he wants to deploy cash. Uncertainty that comes in because of a cyclical factor it might be welcome as well, right? This has a lot of imponderables, a lot of unpredictables, right? So therefore, when the markets, for example, have fallen, and I presume that you, knowing your DNA a little bit, you would have been sitting on a bit of cash. Do tell us how much was it? Have you started deploying? And what has prompted you to start deploying, if you have started deploying?
Yeah. It's a very important approach to stock picking our portfolio construction, that we said cash is very critical in our approach to investing. We want to pursue an absolute return strategy, and that too kind of an outsized absolute return mindset. So we need to buy stocks, the same stocks, when they are valued at a far better price, right? So yeah, we were sitting on about 35% cash end of February, okay? And yes, we have been
35% cash.
35% cash end of February. And
why? Because of valuation concerns?
Various things. And at the core of it was, we were a little concerned that the street was ignoring the risks, okay? The risks of what tariff was bringing, risk of AI, risk of the macro in India. We were cautious on how the mass consumer households leverage levels were a little uncomfortable. We were a little worried about the state government's fiscal side of things not being too good. We were a little wary of SME leverage or SME levels corporates. The large corporates are in great shape, maybe the best shape we have ever had them in maybe 20 plus years. But in SMEs, not as much. Premium households, no worry. The top 5 crore households, they are absolutely in pristine shape. The next 20 crore households, not too good. Central government, fine. State governments, not so fine. So this divided picture, coupled with the valuations which were there, and it was a call that we took for pretty much from October 24 till about February, March now, till that you need better margin of safety in the earnings expectations and on the multiples. And not that we could predict any of these, okay? That's not the approach, right? We are not trying to predict. For sure, I couldn't have predicted a war coming, or the impact of this on inflation, or interest rates, or currency, or fiscal challenges which will come. We couldn't have predicted. Those things cannot be predicted is the whole point, that we can't predict 20 moving parts, and all of them are important in how earnings play out. We can't predict it. What you can predict though, what you can assess though, not predict, is how well are these businesses capable of absorbing them? Are they vulnerable for it, or are they resilient to it? Mm-hmm. And more importantly, what price you are paying. That is in control, right? You control the controllables. What multiples you are paying, and those multiples are not PE multiples alone. You pay price to sales, okay? You pay EV to book value, okay? You are trying to assess what kind of valuations that you are paying. Are they building in some some bit of buffer, or are they priced for perfection? When you are priced for perfection, not that things can't play out, but sooner than later we have seen challenges come, and I'll give you some examples.
Yeah, but okay, please finish your example.
So I'll give you. So in the last 25 years, every year, without exception, markets have corrected at least 10% every year, during the year.
Every year?
Every year.
Okay.
This didn't happen only in 2017. okay, when markets corrected 2 times in 2016, okay. Once early in the year when there were some fears of AQR, asset quality review by Reserve Bank, and later in the year due to demonetization, right? 2 times it happened in 1 year. So in 2017 was the only year markets didn't correct 10%. But 21 out of 25 years, if you had bought into a 10% correction, you made money in that year itself. Same year. 21 out of 25 years. 4 years, that 10-12% correction has led to a deeper cut, which is like less than 20% probability. So that gives you and it's any reason, elections, fiscal, Reserve Bank action, currency, wars, oil prices, you can't predict, okay? So that acceptance, or in some form humility, humble mindset that I can't predict, what I'll control is my action. So wait, give it that room for error, and that's the fundamental approach.
Okay, so where to deploy during these corrections, what's the approach one should be taking, that's the full conversation that, in fact, you can take look at hear the full conversation on our social media platforms as well. But moving on, we're talking about the crude surge that is happening, the hit that's coming in terms of ATF prices as well. In fact, the Aviation Ministry is in talks with all stakeholders to ease the pressure. Danish is here with all the exclusive details. Danish, what do you have for us?
Well, that's correct. Top government sources have exclusively told NDTV Profit that the government has factored in the hike that will happen from the 1st of April as far as ATF prices are concerned. But in order to ensure that there is minimal impact on the ticket prices, hence the Civil Aviation Ministry sources are telling us that they will be reaching out to chief ministers of state and they will be urging them to lower VAT. Because if you look at the overall VAT that these states charge in bigger states like Maharashtra, Delhi and West Bengal, which are bigger aviation markets, over there, we are seeing that the VAT on ATF is over 25%, and even in a state of like Bihar, the VAT is somewhere around 29%, and hence this translates into a higher ticket price. So, in order to ensure that the end user, which is the passenger, they don't suffer because of high ticket prices, hence the government is planning to write to the states to reduce VAT on ATF. Besides this, the Civil Aviation Minister is also likely to chair a meeting with
a slightly patchy line there. Danish, unfortunately, we've just hit that rough patch and could happen with technology. But thank you. You got the gist of the story, viewers. So good to have that. Okay, very quickly. EPL and Indovida have struck a big ticket merger. Let's get in. My colleague and her conversation, rather, Nisha Poddar spoke to Hemant Bakshi, the MD and global CEO of EPL, about this mega merger. Listen in.
Hemant, what's the rationale of this big transaction? Because Indovida is not just into manufacturing of the packaging material, but also into trading of the raw material for manufacturing the packaging.
Yeah. So, Nisha, let me step back and talk to you about the rationale of this deal. So firstly, EPL is in a really good position right now. We've declared double-digit growth for the last 3 quarters consecutively. Our EBITDA has grown by 300 basis points. So we think we have strong foundations for the next phase of our journey. And what we have said, our vision is to create the emerging markets packaging leader for the consumer business. So that's what we want to build. And there are 3 important pillars to this strategy. The first is we want to go into more emerging markets. We then want to make sure that we can expand beyond tubes. Right now, our business for the last 40 years has been in tubes, but there's an opportunity beyond that. So we want to build new formats. And thirdly, we want to become innovation partners for the large and emerging brands in the emerging world. So those are our 3 key pillars. And now talking about the rationale of the deal, firstly, it gives us scale. Our revenue goes up from where we are to $1 billion, so it doubles. Our EBITDA doubles. And in addition to that, our valuation becomes $2 billion.
Well, that's the interesting thing, and we'll get you the full conversation a bit later on as well. But it is that time of the show wherein we get you a very important voice who looks at the geopolitical situation very, very closely. And we loved the conversation that we had with Mr. James Dorsey from the S. Rajaratnam School of International Studies, and we requested him to come in again and try and give us his assessment of whether things have changed or gotten worse in the last 10 days that we last spoke. James, great having you. Thanks for taking the time out. And that's my question really. Are things looking a lot more opaque than what they were 10 days ago?
I'm not sure they're looking more opaque. I think they're looking more dangerous. You have negotiations or talks being mediated by various parties that really amount to motion without movement, or the dialogue of the deaf. With other words, you have two mutually exclusive maximalist plans on the table, the US 15-point plan and the Iranian 5-point plan. Both parties think that they are winning this war, have very little reason to compromise. And at the same time, you have escalation, the tit for tat between the Iranians, the Israelis, and the Americans when it comes to industrial plants, energy facilities, water facilities, the US military buildup that predicts some form of ground invasion potentially, or in any case, a naval blockade, for example, of Karg Island. All of that doesn't bode well.
James, good morning. Hiral on this side. So from what you're saying, does this mean that it's the Gulf states who could actually emerge as the players who could be forcing Iran to rethink their strategy of attempting that increased pressure when it comes to Donald Trump to negotiate from here on?
That's in effect the joker in the deck of cards, if you wish. The Iranian strategy is to increase pain on Israel, increase pain on the Gulf states, increase pain on American consumers, on global energy markets. The Gulf states are a crucial factor in that. If some of the Gulf states, for example, Saudi Arabia or the United Arab Emirates, possibly Bahrain, were to enter the war aggressively, with other words, until now, they have restricted themselves to intercepting Iranian missiles and drones. But if they were actually to aggressively join the fight, then the Iranian calculation falls in the sense that the Gulf states no longer would be pressuring the United States to end the war. They would be, or in any case, to end the war immediately. They would be pressuring the United States to end the war with a definitive result. In other words, either the absolute complete weakening of the Islamic Republic to an extent that it would be very difficult to recover, if not the destruction of the Islamic Republic.
James, in your wisdom, having looked at this for so long, do you believe that the conflict is anywhere close to an end? Because the common folklore of the last 24 hours is that a lot of countries are now doing back-channel talks to try and bring an end to this, because it is in nobody's interest that oil prices stay higher and inflation elevates. So do you believe we are close to the beginning of an end, or is it frankly difficult to say right now?
I think it's difficult to say. Having said that, I think the problem is this. Israel clearly doesn't want to end this war at this point. The Iranians think that time is in their advantage and therefore believe that a prolongation of the war, at least for now, is to their benefit. The one party that would like an out is US President Donald Trump. His problem is that he has boxed himself into a corner in which there is no credible way of declaring victory. And as a result of that, his only strategy has to be an expansion of the war.
James, what is being... Sorry, please continue.
Well, the one thing I was going to add here, there's a second joker in this, of course, and that is Yemen's Houthi rebels, who have entered the war, so far have only fired missiles and drones at Israel. But if they were to interrupt shipping in the Bab al-Mandab, which essentially links the Suez Canal with the Indian Ocean, then you get a significant broadening of the front. And that could, for example, be a trigger for the Saudis to enter the war, because the Houthis would pose a direct threat to their port of Yanbu, which is on the western side of the Arabian Peninsula, and it makes Saudi Arabia one of the very few, actually one of only two Arab states that are able to still export oil despite the closure of the Strait of Hormuz.
Yeah, that's true, and they are hitting records, so I think they would want that open. Let's see what happens there. But James, on social media, a lot of people are citing a 2005 movie and saying that the script looks so similar that in some sense the end game might be that the US in some fashion gets control over the Strait of Hormuz as well, and therefore controls two vital points of oil exports in the world: Venezuela, which is a producer, and Strait of Hormuz, which is the route through which oil may flow, and that could actually be a beneficial thing for the US over the long term, and therefore no reason for them to end the war until that motive is achieved. Have you thought about that?
Taking the Strait of Hormuz or wresting control of the Strait of Hormuz from Iran is easier said than done.
Okay.
It's going to have to involve taking or occupying Iranian territory, whether those are islands close to the Strait of Hormuz, whether that's the Iranian shoreline along the Strait of Hormuz. The Iranians are looking forward to that, at least that's what they're saying. They believe that they have a ground advantage, a home advantage, if they're fighting ground troops, US ground troops. Second of all, Iran has a standing army of somewhere between 800,000 and 1 million people. This is a battle-hardened military. Certainly the commanders go back to the Iran-Iraq war. The rank and file will have had experience, or some of the rank and file will have had experience in Syria. And as far as the Iranians are concerned, U.S. grounds on the troop to some degree levels the playing field and allows them to inflict higher casualties on the U.S. And they believe that higher casualties will increase U.S. public opposition to this war.
So, James, okay, do you think for Iran right now, victory for them is going to be survival of the Islamic Republic? And if that is the kind of scenario, and if the regime survives, it would probably be a strategic defeat when it comes to US and Israel as well, and Donald Trump in totality.
I think we're past the stage where this is about victory, or this is about regime survival for Iran. The regime has survived. It's survived the decapitation strategy. It's shown that there is regime cohesion. We haven't seen splits in either the U.S., the military or the political elite. So now it's about securing their leverage in the region, which is a very different goal from regime survival.
So regime survival is not something that should be looked at now. We're way past that. But thank you, James, so much for joining. It's always a pleasure to speak to you, get insights and understand, what it would actually mean from here on and how things have actually changed and developed so far as well. So interesting moves coming in on the geopolitical front as well. But very quickly, let's just address the new kid on the block. I mean, it's a Coal India subsidiary which is listed at CMPDI. It's a weak listing that you're tracking. So far, a downtick of around 3.5–4%. There you go, 4.5%, 164.29 is what you're tracking in terms of as CMPDI 1 is concerned. Let's see how the stock performs going ahead in trade. But we'll quickly slip into a short break. On the other side, Harold van der Linde of HSBC will be with us for some market talk and the kind of impact we're seeing, because multiple downgrades that have already started trickling in when it comes to India on the back of the impact of the war. Please stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
हाथ, ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं। presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show.
Back with India Market Open and getting a very important global voice to try and understand what does he think of the current market situation. What would the global money be thinking about this? Harold Vanderlyn, Head of Asia Equity Strategy at HSBC, joins in right now with his thoughts. Harold, great having you as always. Thank you so much for taking the time out and being with us.
Thanks for having me on.
First, a broad macro view on Asia at large. One of the beliefs is that during times of geopolitical conflicts, money goes out from a lot of jurisdictions and makes way to the safe haven, which is the US. India has had its worst month, but I think some of the other countries are not too far behind either. Is that what is happening? Money is getting out of all kind of asset classes and floating to safe haven, which is the US?
Yeah, that's exactly what's happening. At least I think so. This morning, somebody asked me, says, where's the money flowing to? And I think it's cash. So people put in cash. If you look in Hong Kong, for example, interest rates have come down. And that's because there's a lot of cash. So what have we seen since the start of the conflict? India is down, but actually there are other markets which are down much more. Korea, Taiwan, Japan, they're down. India is down, depending on which index you look at, say 10%. Korea is down 16, 17%. That is not just because they buy more oil, because India buys oil as well. It's because this is where people were positioned. If you want to reduce your risk in your financial assets, you say, well, I'm going to go into cash and sell my equities. And you sell the equities that you own. And what do foreigners own? They own Korea and Taiwan because that was a story that everybody wanted to invest in. That was the AI story. So we've seen unprecedented sort of volatility in these markets and very substantial outflows. I mean, the total amount of outflows from Asia, from the markets where we have data from, some of the markets we don't have data, so this number understates this. It's about close to $60 billion since the 27th of February when the conflict started. That is almost twice as much as the outflow that we saw during COVID, first months of COVID. So pretty big flows coming out, and I think it goes into cash.
Interesting, Harold. I mean, did I just hear you say that the outflow is close to 60 billion, which could be twice the outflow that happened during COVID? So this is a clear risk off, right? The question, therefore, Harold, is, and I would love to know what you're advising some of your clients as well about this, that if the conflict were to last a bit longer, because God knows Ukraine, Russia started with the same belief that it'll get over in a month and it's lasted 4 years. If this were to last longer, do you reckon that the pace of flows and the quantum of flows could continue as is, or at some point of time that momentum wanes?
Now, I think that initially this can continue because we've seen a lot of inflows, but actually, and the number I gave you is just for the March, 1 month. And then the number for COVID is also for March, is 1 month. So we've seen in March pretty substantial outflows already. That can continue because it seems the conflict is still in a sort of an ongoing sort of form of escalation. And therefore, if prices continue to go up, that will remain very negative. But at some point in time, we will have to make a step back and say, okay, does this really mean that growth is going to collapse across the region? No, it's going to come down probably, but not collapse. Does it mean that the banking systems cannot function? That's probably not the case either. We're not having a sort of moment that we had in Asia in the late 1990s when the banking systems fell over. So the ability for Asia to withstand this, the economies, but also the markets, is there. But we're not at that point yet, whereby we say this is the time to start to take a look at this. If we work on the assumption that you just gave me, this conflict is going to last longer, then yes, there is initially more outflows from these markets, and people will continue to sell the markets that they bought. And that is mostly North Asia, actually.
Harold, good morning. Here on this side. So you're saying outflows could continue from here on. Now, if that is the kind of scenario one should be watching out for, and if you have to tie it up to where the valuations stand in terms of the Asian markets, say you look at China, you look at Taiwan, you look at Japan, you look at India, where does India fit according to you in that gamut? And what would you advise investors to do with India? Because you've noted time and again that it's very easy to exit the Indian markets, but the entry point becomes very important yet again.
Yeah, I think for the moment, valuations is not what is very high up on people's sort of thing. If this conflict were to continue, then it's really about where are there pockets of growth that probably are fairly resilient. And I think there are these pockets of growth across the region in India as well that are fairly resilient to the ongoing conflict. Because that creates safety. Valuations comes in at a later stage. At the moment, the reason for that is also simple. Asia is not super expensive. I mean, India's valuations were high 2 years ago, but they've moderated, and it is probably still the most expensive market in the region. And there's good reasons why this is the case, but it's elevated. But in other markets, we've seen valuations go up as well. That was based on earnings sort of upgrades people expect to come through. That might not happen. But valuations across Asia were not extremely high to start off with. So valuations most people feel reasonably comfortable with. What it is really, it's now positioning that's key. And then eventually it's what can continue to grow where I feel comfortable to holding stocks. Before later on you say, I'm now going to reallocate my money again. So first it's simply about safety, and that's cash, or if you have to be in equities, in businesses that will continue to grow quite well, irrespective of what happens with the conflict.
So what should be the strategy, Harold, when it comes to stock selection at this point in time? Because if you're looking at an exposure to some extent when it comes to equity, strategy becomes key. Pockets of growth that will grow from here becomes key.
Yeah, I think there's three things you need to do. Firstly, you have to recognize, under the assumption that this conflict continues, you have to recognize that everything can come down. So if you say, I don't want that, well, then you're going to cash, of course. But if you have to be in equities, and there are portfolio managers who have to be in equities, that's their job, then you want to go into, and this is then the second thing, you want to go into those sectors where you think the impact is limited, more limited than others. You can think, for example, about consumer staples. Now, they will be impacted because they use packaging, and packaging will be impacted because of oil and plastic prices. But you go for the companies where the impact is much less than companies where it's much bigger. So that's one thing. Think about telecoms, consumer staples, utilities, and these sort of things. Another way to deal with this is to think about themes. What will happen in the world, what will continue in the world, irrespective of what happens in the Middle East. Now, for example, my suspicion is that over the next couple of years, defense industries or engineering companies that are related to that will continue to see growth. And we will also see, for example, a continued surge in trying to get access to alternative sources of energy. Nuclear, hydro, wind, solar, whatever it may be. And you see in some countries across Asia already talk about trying to restart or accelerate that. So there are these sort of themes of sectors, you could call them maybe as well, that probably will continue to do reasonably well in this very difficult sort of environment. And that's another approach you can take and build exposure to that.
Got it. Harold, if the conflict were to come to an end in the next 15 days, God willing happens earlier, but I agree nobody knows, do equities as risk assets, because valuations in a lot of geographies have corrected, become the first ports of call, or do you believe markets or money might flow out of cash into more conservative investment avenues?
If this conflict stops over the next foreseeable future, right? And therefore, assuming oil moderates again and these sort of things, I think equities could perform globally initially very well. But it will be a struggle for us to get back to the levels where we were, because growth is impacted. We haven't, I mean, there are businesses in India or in the Philippines or in Taiwan that have been impacted. Some of them had to be closed. So the actual economic impact, the actual growth impact is already with us. So that will limit the upside to a certain extent. But yes, I think equities would be, it's a high risk sort of assets in most people's portfolio. So you take out when there's high risk is rising, but if you think risk is moderating, equities can outperform cash or bonds for these as alternative assets. So you can see a bounce, but I don't think it will be a bit of a struggle to go back to the peaks that we were only a couple of months ago.
That kind of sums it up, and Herald, really appreciate. Just one last question, very quick one. Would countries showing growth, the likes of India, etc., also become ports of call, or is that also a nuanced call with what happens to AI, what happens to crude and other factors?
All countries in Asia are being impacted in one way or another. Some of them more than others. And that's because they either have to directly import the oil, or the dependency on oil is higher. This is also the case, not India, but Korea, Japan, Taiwan are large importers of oil. And these businesses, they need borium and helium and all sorts of other chemicals in their tech processes. And that is starting to become an issue. If there's one country where you say, actually, most of the money is domestically kind of generated, so the markets are not very dependent on foreign flows. India and China have that. Countries that have very high inventories of oil and therefore can deal with this price shock better. China is that in particular. So each of these countries will be impacted in different ways. But yeah, and that's what we got to keep in mind when we come to sort of country selection and how these businesses will be impacted.
Okay. Herald, really appreciate your time. Thank you so much, and may this conflict end soon.
Let's hope so. Thank you very much.
For all reasons, excluding not just the markets. But yeah, very well put by Herald van der Linden. I think the key point is, don't expect the bounce back to lead markets back to levels that they were, because growth is impacted. Herald, can't put it any better.
Any better? I think, you know what we started off saying, that if the RBI entry in terms of intervention for the rupee would have come in, I mean, if the rupee had come to these levels without RBI intervention, markets would have read it well. But I think the markets read it really well, because you're back at 94 to the dollar.
Yeah. Well, maybe it's a good message to the speculative elements that Tiger Abhi Zinda hai. Well, with that, it's a wrap on this leg of India Market Open. From Hiral, me and the team that put this show together, thanks so much for tuning in. Ask Profit is up next.
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है, और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore.
This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's happening?
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5 only on NDTV 24/7.
India, a land of story and resilience. 1.4 billion hearts share this.
Welcome to NDTV Profit. My name is Varsha. Well, Central Mine Planning and Design Institute is in focus on the back of company listing on exchanges today. Well, company offers consultancy and support services and also offers services across the entire spectrum of coal and mineral exploration and mine planning and design. But to speak more about it and what are the growth targets that the company has set for itself for next 2 to 3 years, I'm here joined by Mr. Chaudhary Shivraj Singh, who is Chairman and Managing Director at company. We have Mukesh Agrawal, Director Finance of Coal India, and Ashish Kumar, who is Director Business Development at Coal India. Well, welcome gentlemen, and pleasure to have you at NDTV Profit, and congratulations for your listing. Well, Mr. Singh, coming to you first, now that whole India will participate in your growth story, what are the target sets when it comes to central mine planning, considering your 2-year revenue CAGR of around 23%?
Thank you, Varshaji, and thanks to all your viewers, and thanks to all the investors who have posed their confidence on the growth story of CMPDI. CMPDI in the past 3 years has grown in revenue and profit at about 20% CAGR. And we are targeting to maintain this in next 3 years as well. So as we have already been telling about our growth story, which has the opportunity areas in exploration in not only in coal sector, outside coal also, and in downstream services of mine planning to finally closure of mine and rehabilitation of the mined out land. So that is how we are targeting that we will be maintaining our profit and EBITDA margins.
Understood. Got that point. Mr. Agrawal, coming to you on this, if you see the IPO is 100% offer for sale and the proceeds will entirely go to Coal India, how does Coal India intend to deploy these proceeds? Will be for debt reduction or capex or diversification, if any?
Yeah, madam. Actually, if you see, Coal India is always from last 2-3 years deploying more than 16,000 crore rupees in the capex, and Coal India has made a roadmap of around 1 lakh crore rupees capex plan for the next 5 years, in which it works out to around 20,000 crore rupees capex will be there every year, and in which we had taken 4 streams for the coal to gas and renewable energy, thermal energy, and the critical mineral. So all these proceeds which we are getting from the IPO and the internal accruals will be deployed for the capex.
Understood. And Mr. Singh, how do you plan to structurally diversify companies' revenue away from Coal India over the next 5 to 7 years, considering more than 66% of your revenue comes from Coal India?
Yes, so we have brought down our revenue depending only on the anchor customer from more than 80% to 66%. And again, as we are going with Coal India into minerals as well as going on our own to minerals, especially critical minerals and REEs. So that provides a lot of opportunity for us, and I am very much confident that the Coal India and government part, which is at about 90% at present, will come down to 70%, and will be having 30% of outside Coal India and government.
Well, that was the recent listing of Central Mining, largely a day which has been dominated on the downside, and hence stocks down 4%. And even the 40% EBITDA profile not yet enthusing investors, at least at this point of time. Hello and welcome. You're watching Ask Profit. My name is Puneet Zaveri. With me is Somit Sarkar, and we'll try and solve all your stock-related queries in the next 1 hour. So if you haven't already, do start sending them on the numbers that are flashing on the top of the screen. You can also call us. That number of the landline number is also on the top of the screen as well. Before we go to our guest, take your stock-related queries. A very quick check of the markets. The GIFT Nifty did indicate a downtake of almost 250 points, and the market continues to be in that mode today, very close to a 22,500 mark. It's not in terms of giving any support at this point of time, so we'll continue to monitor those levels. But the heat map shows you the pressure that is on the banking index, led by some measures by the RBI, and hence all those banking index, HDFC, ICICI, all down. Kotak Mahindra Bank, Shriram Finance, Axis Bank, the top 3 losers for the Nifty 50. Bajaj Finance is also some of the other ones. So is SBI in the top 10 losers for the Nifty 50 at this point of time. The sectoral heat map also will reflect this pressure that's visible on the banking index and the other indexes as well. So you're seeing PSU Bank, Nifty Bank, as well as the private bank index and financial services, which are bearing the brunt of most of those losses. But Realty continues to be down in trade today. India Defence down 1.4% as well. But very quickly look at the advance decline ratio, and it's not going to be a very pretty picture as well, because we're seeing a sea of green across spaces, across stock as well. So the advance decline ratio also will reflect that pain in the broader markets, and almost a 1:5 in terms of advances for now. So almost 5 stocks declining for one that's advancing, and the BSE 500 also very quickly shows you that perspective. Now, individual stocks like KNR Construction buzzing on the back of our order win today, but IRB Infra also got a huge order win a few days ago, and that momentum has continued. NALCO continue to be in the uptrend today, but City Union Bank, Minda Corp, Delta Corp all down in trade today as well. But let me welcome in Saurabh Jain, Equity Head Research at SMC Global Securities, on the fundamental side of the show. Kunal Rambia, Fund Manager and Trading Strategist at The Streets, now joining on the technical. Gentlemen, both of you, thanks so much for joining in. Let me go across, take the first query from Mohit from Ludhiana. He is holding shares of NMDC at just 19 rupees per share. He's holding roughly around for those 500 shares. And his question is, shall I book those profits on that investment, or continue to hold for the next 3 to 5 years? Saurabh, welcome to the show. What would be your recommendation?
Hi, good morning. Thank you for having me on the show. See, we are quite bullish on the metal and mineral resources. NMD is one of the good pick out of the metal pack, and we see the prices are likely to move up, which will inch up the earnings and the margins for the company, and it is good to hold for the next 3 to 5 years.
From Andhra Pradesh is holding 233 shares of Ease My Trip, bought at a price of 21 rupees. He wants to know what's the long-term outlook on this counter, and should he buy on this on the dips that we are looking at currently. Saurabh, any view on Ease My Trip? Is currently sitting on a big loss here.
See, I think the management has gone wrong on various its strategies, and there were some corporate governance issues were also there, and the stocks have been languishing and underperforming for the last so many quarters. Now it has reduced to, I guess, in a small cap category, or maybe micro cap category. There is no point in sticking with this stock. In my opinion, it is better to get out.
Better to get out of Ease My Trip is what Saurabh recommends. But the next question is coming in from Sanjay from Bengaluru. He wants to average IRFC as well as Texmaco Rail. So he holds both of these counters. He's not mentioned his buy price, but Kunal, welcome to the show. Would that be your recommendation? Would you recommend Sanjay to average both of these counters at this point of time?
Good morning. So if I look at IRFC, again, this counter is absolutely underperforming, and we saw the highs of around 225, 230 somewhere in July. Counter is now trading at 90, and in spite of such a massive correction, there is no sign of bottom formation so far. So I'll suggest to stay away from these counters. I'm not saying to sell, but right now, wait for the consolidation to happen. V-shaped recovery is anyway rolled out. So once we see some kind of consolidation, we can take a call on averaging out. So for now, just wait on the position which you're holding rather than averaging at this level.
Kunal, the next query is for you, and it's from Balaji from Chennai. He wants to know, can he buy Sundaram Finance at current levels for the next 3 to 6 months? Any target that you could suggest, Kunal?
So on the Sundaram Finance chart, again, since I guess Jan 2024, this counter is sideways consolidating. Recently, it has come down from 5,600 to 4,400. This is a massive correction. Now it is reaching near the previous bottom of 4,300. So yes, if the counter consolidates near the present level, one can think of initiating a buy with the stop loss of 4,300. But at this point in time, where the counter is trading 3.5% lower even in today's trade, avoid buying at this level, but watch out for the levels of 4,300 as a strong support.
Got the view, Kunal. But the first call for today, dialing in from Hyderabad, Chandu has a stock query for us. Chandu, good morning. Welcome to the show. What's your query?
Very good morning. Very good morning to all. My query related to Shriram Finance. I have like 500 quantity at average price of 678.
Okay.
I'm a long-term investor, but it went to around 60%. I got it, but I'm unable to book profits and all. But I wanted to hold a long-term view. Will I book and I move to some other stock, or it's going down now?
Got it. Well, Chandu, this is a very pertinent query. Consistently this particular counter. But Saurabh, what do you make of what's happening with these CV financiers, right? We're seeing pressure on Chola, seeing pressure on HDB Financial as well. Is there any structural play for the CV makers, or is it that the larger, broader market correction is hampering all these stocks? And what would you recommend Chandu to do?
I think it is the mix of both. It is the broader market corrections which are, getting down stocks even from the stronger baskets also. And there is also a concern for the market that maybe going forward because of the higher crude prices, which may impact the industry and all, may taper down the demand going forward. So for that matter, I think there is a bit of pressure. But in case with respect to the Shriram Finance, I think they have done a recent deal, and the outlook for the next 3-5 years look quite optimistic. Since he has talked about next 3, 4, 5 years, then I'll suggest him to take a longer term view and keep holding your stock. Otherwise, I think in the short term, many investors have lost money in the short term. So I think there is no point in looking at the current market scenario. Stick with your investment with the next 3, 4, 5 years.
Okay, the next query is coming in from Kotresh. He wants to know whether can he buy Lodha developers at the current market price. Any targets that you could suggest on this, Kunal?
So it's a linear decline. In fact, in the last 1 month, this counter has come down from 1100 to 680, and still there is no respite on it. So avoid buying such counters. I'm not denying the support which we might see near 550, 560 levels, but why to catch the falling knife, right? So wait for some kind of consolidation and think of initiating a buy at that point in time rather than just catching the falling knife.
Got the view, Kunal. The next question, that's coming in now. It's from our viewer Udit from Mumbai. Udit, good morning. Welcome to the show. What's your query?
Good morning, gents. My query is on EPAC Free Fab. I've been continuously following your narratives about these shares, and I know the fundamentals are strong, but over the last couple of weeks, this is sort of going down. And is it worthwhile to catch the falling knife now or wait for these things to go down and then try to average it out?
Got it, Udit. So your pertinent query is on EPAC prefab. Is that correct? And you're asking if it's pertinent to average down at this point of time within this particular counter. Would that be correct?
That is the correct reasoning, Punit.
Okay, but Udit, your buying price at 109. I can see that the 52-week low is also what's hit today. So how did you buy it at 109? I think the IPO price was also over 190 to 200 rupees, right?
No, I got that wrong. I think I'm falling on a loss, Punit. That figure which I told to NDTV Profit is wrong. I'm on a loss now.
Okay, you're in a loss. So what would be the average price you're holding this counter at, EPAC prefab, right now?
200.
200. Okay, got it. Saurabh, this counter post quarter 3 results has continued to be weak, right? Should Udit continue to hold, maybe wait for quarter 4 results to just get some perspective from the management? Would that be your view?
I think yes, he may choose to wait for the March quarter earnings. It is a recent earnings, and the confidence usually comes after 3, 4, 5 quarters when we see the results after the listing and the kind of the management commentary, whether the management commentary is matching up with the result coming out or not. In this case, I think it is too early to make a comment. I think it will be wise to wait for the March quarter earnings.
The next query is coming in from Murthy from Vishakhapatnam. He's holding 50 shares of Amara Raja, bought at a price of 1,150. He wants to know the long-term view. Should he average or exit? Saurabh, any view on Amara Raja?
I think while the space is good, but I think in the short term, what is happening with the commodity, I think commodity started running even before this war broke out. And I think this is the material cost which may be disturbing all these companies. In the short term, I think the pain should be there. I think the earnings and the margins will continue to bleed. So in my opinion, I think it is better to get out in case you get any opportunity.
Got the view, Saurabh. But the next question that's coming in, it's from Rajesh Maheshwari from Indore. He is a regular viewer. Asking on a counter that has been beaten down, bruised, name it, it's Ola Electric. He's holding roughly 1,400 shares, bought at 49 rupees per share. He's asking, in the present scenario, does it make sense to stay invested or exit out of this counter or move on? Saurabh, let me come back to you because the financial year is almost ended and it seems to be like at least a 30 to 40% volume decline is expected in FY26 for the company. Is this the bottom? Would you suggest continue holding since he's bought it at 49? What would be your view?
I think in the market, the stock price generally goes up when there is an enthusiasm, and enthusiasm comes from the earnings. When the earnings are seeing erosion, how the stock price can go up. I think there is no point in chipping. Otherwise, also, there have been quite issues with their management and their guidance also. So market has no confidence in this company, and that is why we are seeing the stock price cooling off in the last so many quarters. I think, in my opinion, it is better to get out.
Next is a caller query coming in from Bangalore. Mohammed, you can go ahead and ask your query.
Hi, good morning to you all.
Good morning, Mohammed.
I have Azad Engineering, bought it at the rate of 1,551 average price, around 50 stocks. I want to know what is the short-term view on this and what should be the stop loss?
Kunal, short-term view on Azad Engineering, any stop loss if you could suggest?
Absolutely. In fact, this counter is consolidating in a broader range. The support on the chart, which I can see, is around 1385, and at the same time, resistance is at around 1900 levels. I think last week only it hit the exact support level of 1360. So consider that to be a good stop loss. 1360 can be a good stop loss. One can think of, in fact, buying this counter because the risk-reward ratio is favorable, and that support is not broken since 1.5 years. So yes, it can be bought, and if our viewer is already holding, I think 1360 can be the good stop loss, and the targets can be around 1800 levels. Now this is again on a weekly chart, so it's a positional target.
Positional target from Kunal coming in on Azad Engineering. But next question is coming from Tulsi from Hyderabad. Again, a question that we've been getting quite a bit on HDFC Bank. Now, Saurabh, she's asking if it's the right time to buy into this counter. Now, you've seen the RBI measures have an impact on the stock, so it's trading at levels that we've not seen for the last few years. Are you in the camp that suggests buying HDFC Bank in one go in a staggered manner? What would be your recommendation?
I think at this point in time, I would not be a contrarian with respect to the market. I would suggest, I think it is better to let it go. Do not chip into the HDFC Bank. Maybe there are some issues which investors are not being privy to. I think instead of chipping into HDFC Bank, I think ICICI Bank looks much promising in the private sector space.
Okay. The next query is from Venkat Ramanan from Bangalore. He's a senior citizen. He is invested in multiple banks, Bank of India, Equitas Small Finance Bank, Yes Bank and IndusInd Bank. Currently, he is sitting on a loss of around 10 to 15% in each of them. He wants to know which of these can he add, exit or hold. Saurabh, any view on Bank of India, Equitas Bank, Yes Bank and IndusInd Bank? Which should he hold, which should he exit, which should he average?
In my opinion, I think he should exit Equitas, IndusInd and the other name you said is?
Yes Bank, IndusInd Bank, Bank of India and Equitas Small Finance.
Apart from Bank of India, I think you can sell all the remaining three. And if you would like to be in this space, I would suggest you to go with the maybe Indian Bank and ICICI Bank.
Got that view. So Saurabh's definitely not liking a lot of those banking names this morning at this point of time, barring something like ICICI. And got that view, Saurabh. But the next question coming in from Zakir from Dubai. He's holding shares of transformers and rectifiers bought at roughly around 280 rupees per share. He wants to hold for the next 6 to 12 months. Kunal, would you recommend that? Any targets that you can give for Zakir?
So on the transformers and rectifiers chart, if I look at the weekly chart, this counter is consolidating well between 230 levels to 330 levels. But on the daily chart, yes, it is now again, breaking their small minor consolidation. So the good support, which I just mentioned, is 230. I think that can be the level to watch out for. If he gets the opportunity to buy near those levels, he can think of averaging out also. And again, the positional targets on that can be 325 to 330. But at this point in time, which is at 259, I think we should wait for the the price to come near those extreme levels to have the favorable risk reward ratio.
Okay. The next query is coming in from Mahesh from Andhra Pradesh. He's holding 67 shares of Tata Tech, bought at an average price of 727. Should he continue to hold this counter for long term? Saurabh, any view?
See, we have a very negative view on the IT sector, and with respect to the Tata Tech, the company has seriously disappointed over the last many quarters. I think that is why the stock has been languishing. There's no point in sticking with it. I'll suggest an exit.
Got that view, Saurabh. But the next question on ADF Foods. Now, Sonu Kumar from Haryana actually bought it at 182, currently sitting on a loss. Kunal, what would be your recommendation on this particular stock? Should he continue to hold? And I know you're against averaging, but what would be your view?
See, now counter has come down from 350 to as low as 150. And if I look at the January 2023 lows, December 2022 lows, those were around 140, where the counter consolidated for quite a long period of time. So yes, now it is reaching near that support level. Advisable to hold on for now with the stop loss of 140. And again, as I mentioned earlier, if counter consolidates near this level of 140 to 160, one can think of initiating a buy. But wait for a while. I think this support level should be held. Looking at the volume activity, it's a bright possibility.
Very interesting, Kunal. But viewers, Saurabh as well as Kunal, time now for the rapid fire round in this edition of Fast Profit. Request you to keep your answers on buy, sell and hold. The first question coming in from Meher. She wants to know about IRCTC now that the stock has hit a 52-week low. Kunal, what would be your view?
Avoid it.
Rani from Tripur wants to know whether should she buy Nalco for the next 2 months. Kunal, any view?
Again, avoid it.
BHEL bought at 272. Saurabh by Ramesh. What should he do with his 485 shares at the current juncture?
Keep on holding.
Anil Singh wants to know whether is it a good time to buy PCBL Chemical. Saurabh, any view?
Avoid.
Hindustan Copper bought at roughly 470 by Sunil. A view, Kunal, on this counter?
Support is 450. Hold with the stop loss.
Murli Mohan from Kerala has bought 2,000 shares of Suzlon at an average price of 60 rupees. Can he buy more for the next 6 months, Kunal?
Consolidation phase, support is 39. Think of buying with that stop loss.
Kamlesh is holding 500 shares of Samman Capital at 155. Saurabh is asking, in view of the acquisition by another company, what should he do with this counter?
Hold.
Abhirup is holding 235 shares of Bank of Maharashtra at an average price of 64 rupees. Can he continue to hold this counter for the next 5 years, Saurabh?
Hold.
Between SBI as well as Canara Bank, Saurabh, since we are wrapping up the banking discussion with you, what would be your view for Kaushik? Is this good to buy now?
I think go with the both.
Siva from Amravati is holding 2,000 shares of IRFC, bought at an average price of 200 rupees. Should he sell or wait for the next 6 months, Kunal?
Exit.
We got the fundamental view on HDFC Bank, Kunal, but on the technicals, is this a good time to buy, is what Akhilesh is asking.
Absolutely, I'm very comfortable with the present level. The consolidation breakout is 775. Look at the buying above that level.
Sunita from Hyderabad wants to know whether is it a right price to buy Sirma SGS for long term, Saurabh?
Yes, you can buy.
Colgate, Saurabh, bought at 2213 by Sudhir. What should he do with his 195 shares now?
Keep on holding.
Chandra from Bangalore is holding shares of DCX system. Should he hold it for short term, Kunal?
Exit.
The next question, that's coming in, it's from, let me pull up this counter. It's on Suzlon actually, bought by Murli Manohan. He's holding 2,000 shares at 60. What would be your view, Saurabh?
Hold for the next 3 years.
Okay, Alkesh Devidan is holding shares of ICICI Bank at an average price of 1,366. Should he buy more at the current level or any other price that you would suggest, Kunal?
Absolutely, buy with the stop loss of 1200.
BEL bought at 408. Saurabh, what should Mr. Sharma do with this counter now?
Hold for long term.
Got it. Well, that's the end of the rapid fire as well as the first round of the rapid fire as well. But viewers, stay tuned. Kunal, we'll let you go on that note. Thanks so much for joining in. Saurabh, stay with us. A lot more stock-related query viewers on the other side of this very short break.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
हाथ ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
To understand the Tamil Nadu twist, join me in the midst of people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's happening? How to
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5, only on NDTV 24/7.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
With a hand in hand, will the two leaves and lotus bloom? Who will whistle to success?
Welcome back. You're watching Ask Profit right here on NDTV Profit. If you haven't already, do start sending in your queries. You can also call us, talk to us directly for those stock-related queries with us, with our guests as well. Before we move on to those, a very quick check of the BSE F&O setup for today, because we continue to see pressure in the markets. The Sensex also shows you that at this point of time in terms of stocks, because that has been the key aspect, right? A lot of those stocks in the banking space continuing to be under pressure. Axis, Kotak, Bajaj Finance, Finserv, SBI, top 5 in that space down in trade today. Even in the gainers, very, very minuscule to form a trend. So continuing to be under pressure for now, down 1.4%. Apart from that, also, you are seeing the BankX also continuing to be in a similar trajectory for now. And the banking index, basis of what you're seeing on the Sensex heat map also continues to be under pressure today. So continuing to see those stocks which will be hampered, and the banking names and the Nifty bank will be something to watch throughout the day. In terms of long build-up, you're seeing Nalco as well as SAIL continuing to show momentum today. Short covering seen across Hindalco and Coal India. Now, Coal India, you also had one of its subsidiary lists today, so potentially could be a trend, but only up 1.4%. In terms of long unwindings, though, you're seeing Syngene feature on that list. So is L&T Finance. While a build-up of shorts seen yet again, and no surprises here in terms of the banking names. So continue to track all of these names. But let me welcome Ajit Mishra, SVP Research at Religare Broking on the technical side now. And Saurabh continues to stay with us. Ajit, very good morning. Thanks so much for joining in. Before I come to you, let me just go across, take the next stock-related query. It's coming in on Indigo from Nitish. Now, he wants to know a short-term outlook and if it's the right time to enter. Ajit, given the volatility, is it visible on the charts as well? What would be your recommendation?
Yeah, good morning, Puneet. So yes, the stock has corrected considerably from the record highs. We are currently hovering around the key support area of the long-term moving averages on the weekly chart, which placed around 3940, 3950 zone. But still, the crude is still a headache, not only for the airlines, but for the other related stock sectors like, paints and tires and all. So that is what reflecting that every recovery or rebound attempt is usually attracting selling pressure, and the stock is still hovering below its short-term averages. So in my opinion, if the view is short-term, one should refrain from any aggressive buying in the related sectors. And for Indigo specifically, wait for a decisive break or a recovery above 4300 mark for any fresh buy.
Okay. The next is a caller query coming in from Bareilly. Arvind, you can go ahead and ask your query.
गुड मॉर्निंग सर। सर मार्केट की हालत तो बहुत बुरी है। मेरा क्वेरी था, मेरे पोर्टफोलियो में एक शेयर है शक्ति पंप करके, मैंने 557 के रेट पे ले रखा है सर। अभी मेरे पोर्टफोलियो में 15% गिरा हुआ है, तो मैं इसको एवरेज करना चाह रहा था, क्या और भी गिरावट देखने को मिल सकती है जिस हिसाब से मार्केट है, और आप लोगों के और भी मैं शो देख रहा था, तो कहीं पे मतलब ऐसा तो लगता ही नहीं है कि मार्केट यहाँ से रुकने वाला है। तो
अच्छा, आप ये शेयर लॉन्ग टर्म के लिए होल्ड कर सकते हैं बराबर?
लॉन्ग टर्म देखिए सर ना कि अगर लॉन्ग टर्म बोलते हैं ना तो मुझे अपने गुरुजी की याद आ जाती है। उन्होंने मेरे को जो उन्होंने स्टॉक मार्केट सिखाया था, उन्होंने कहा मार्केट में कोई श्योर थिंग नहीं होती है, इवन एज एन कॉन्डम भी अनसेफ रहता है। तो उसी हिसाब से मार्केट की हालत है, अर्निंग्स तो आएंगी नहीं कंपनियों की।
ठीक है सर, बट आप लंबे टाइम के लिए होल्ड कर सकते हैं कि नहीं वो बताइए।
तो मैं मैक्सिमम 3 साल के लिए।
3 साल के लिए, ठीक है। सौरभ, एनी व्यू ऑन शक्ति पंप, शुड ही एवरेज एट द करंट लेवल एंड होल्ड फॉर द नेक्स्ट 3 years?
देखिए, मार्केट में जैसे आपने बताया अनिश्चितता बनी हुई है, सेलिंग बनी हुई है, स्टॉक्स काफी गिर रहे हैं और खासकर वहां पर ज्यादा सेलिंग आ रही है जहां पर अर्निंग इरोजन हो रहा है। शक्ति पंप के केस में वैल्यूएशन भी ज्यादा था और अर्निंग इरोजन भी हो रहा है। अगर आप लास्ट के कुछ क्वार्टर देखेंगे तो नतीजे अच्छे नहीं आ रहे हैं, डी ग्रोथ हो रहा है, तो मेरी सलाह से आप निकल जाए इसमें से।
Got that view, Saurabh. So an exit is what Saurabh recommends at this point of time. The next one, Saurabh, also coming back to you, is on ITC. Our viewer Jayesh actually holds 10,000 shares, bought at 350. So currently sitting on a considerable loss. Seems to be that he might have bought post what we see in terms of the cigarette price hike. Now, what should he do with this Saurabh? Because he is, of course, holding a considerable number of shares. Would you recommend him to average down now, or what would be your view?
First of all, I think the recent hike was enormous. I think there has been a hike of I think in the range of 20 to 40% in the case of cigarettes, which is not well taken by the markets. And in fact, in the days to come, we'll see how when the March quarter earnings will come, how it has impacted the company's volumes on the cigarette side. And in my opinion, I think the market has taken cognizance of the fact, and that is why the stock has been hammered down since that hike has come. So in my opinion, I think there is no point in getting average of such a huge quantity. Rather, I would suggest him to better, I think, reduce his position and maybe look for the space in the metal and banking sector.
Okay. The next query is coming in from Anuj from Delhi. He's holding 1,000 shares of Suryodaya Small Finance Bank at an average price of 121. Any outlook on this, Ajit? Suryodaya Small Finance Bank?
So, Sumit, this stock is still lingering with the negative bias for almost several months now. Though there were multiple attempts of recovery, rebound in between, the stock inch toward 150 mark, but it couldn't sustain. The good part is that he had bought it at recent levels. So my recommendation would be to exit and sit on the sidelines, let the stock stabilize above let's say 145 mark or a dip towards 100, not in between.
Got that view, Ajit. But the next question, it's coming in on KIMS, Krishna Institute of Medical Science, and our viewer Suresh Nair from Hyderabad is actually a long-term investor. He's holding shares at 702, so currently sitting on the loss. Ajit, how do you view KIMS? It's also done a recent 1,500 crore QIP to reduce debt, but seems to be that Suresh might have bought it at a little elevated level. What would your recommendation be to him?
So Puneet, if you see that at the early of this calendar year, the stock rebounded very swiftly, means from roughly around 560 to 760. It was very close to the record highs. But after that, we are again seeing that the stock is witnessing pressure in line with what we are seeing across the board, and especially in the healthcare basket as well, which were holding strongly earlier. But across the board now, we have started seeing correction, be it Apollo, Astra DM and all. Comparatively, it still looks better if we compare it with the other spaces wherein the damage is average 40 to 50% from the record highs. So I believe that there could be a possibly consolidation around the current area. Maybe 580, 600 could be the zone where the stock might stabilize before the next leg of the up move. So fresh adding or adding to your existing position is not recommended, but yeah, you can continue to hold your longs with 580 as a closing stop.
Divya Divya has bought 150 shares of Swiggy at an average price of 396. She wants to know whether should she hold this counter for the next 3 to 6 months. Currently, she's sitting at a heavy loss here. Ajit, any view on Swiggy for the next 6 months?
So Sumit, the stock is trading at the record lows. Means earlier that in the month of May, around 297 was the previous record low, and we've decisively breached that mark, and it's gradually inching lower with every passing day. So there's no sign of recovery. I understand that she is sitting on losses, but since the market tone is negative and the stock is already at the 52-week low record lows, the prudent approach is to look for exit opportunities. So in case if there will be any bounce, let's say towards 280, 290 levels, you should consider exiting. In the interim, do maintain a stop at 250.
250 would be a stop is what Ajit is recommending. Down and out discounter yet again over the last few months. But Ajay is calling us actually now from Mumbai with a stock-related query. Ajay, good morning. Welcome to Ask Profit. What's your query?
Yeah, good morning. I wanted to know about Indigo Paints. Is it the right time to accumulate Indigo Paints, or should I wait for some more time?
And Ajay, do you have any other paint counter in your portfolio right now? Will this be the first one?
Nothing in paints.
Nothing in paints. Got
Nothing in paints.
Saurabh, we've seen price hikes actually, and we broke the story on NDTV Profit this morning by Berger Paints as well as Asian Paints. Indigo is differentiated in terms of the way they report numbers, also volume as well as value separate for all categories. So, would you recommend Ajay to buy into this counter now?
I think it will be a contrarian buy, but yes, after the news of price hike, I think by the Asian Paint and the other companies, I think some kind of a sanity should come into the prices. And on the valuations side also, since it is a smaller company and the valuations have also become more attractive now. So I think if you have a horizon of maybe more than 1 year or 2 years, then you can chip in.
Okay, the next query is coming in. From, the viewer hasn't mentioned his name, from Vedant, and he has bought few shares of IIFL Finance at a price of 505 for the he wants to know whether should he continue to hold this counter for the next 2 to 3 years. Saurabh, any view on IIFL Finance?
Not particularly on the IIFL Finance, but yes, overall on the bank and NBFCs, we are positive, and for the next 2 to 3 years, it looks positive.
Looks positive for now, according to Saurabh. But taking across the next query now, Mr. Lobo actually is holding shares of REC. Now, we've discussed this, stock over the last few weeks between the merger between REC as well as PFC, but he holds roughly 10,000 shares and he's sitting at a profit of 1.9 lakh rupees as of now. Now, REC has come off quite a bit since this impending announcement. Saurabh, if he still wants to hold, would you recommend him to book profits for this one and maybe buy into PFC? Would that be a better play?
Yeah, of course, that would be a good play. And from both the stocks, from the valuation standpoints, looks attractive, and there is a good dividend yield play also. And the growth should be there for the next 3-5 years, close to 14-15% CAGR.
The next query is coming in from Akhilesh. He wants to know, whether is it a right time to enter Graphite India for the next 2 to 3 years. Saurabh, any view on Graphite?
Metal space is looking interesting, and it is more of a related play. So yes, he can chip in.
The next counter that's coming in is from K Guru from Chennai. He wants to buy into Power Grid and Coal India for the next 2 years. Saurabh, would you recommend that, buying the stock now?
I think you can chip into the Coal India, and with respect to the Power Grid, I would suggest better to look for NTPC.
Okay, the next is a caller query coming in from Bangalore. Venkathe, you can go ahead and ask your query.
Very good morning, gentlemen. I've been a very, regular viewer of your show. You have been doing a very good job. And my query is regarding, Mahindra and Mahindra Finance.
Okay.
Okay. This stock I recently bought about 3-4 months back. And because it has been backed by Mahindra Automobiles, which I have been making a good money, I bought it. And my buy price is on an average 306.
So can you hold this counter for long term?
Yeah, I can hold it for long term, and I hold 250 numbers.
Okay.
Is it a good stock to hold for a long term, or I should get rid of it?
Okay. Saurabh, should he hold the M&M Finance for long term, or should he move to some other counter?
I think a lot of volatility is there in the. I think a lot of volatility is there in the company's financials, and if you look in the last few months, the stock has been underperforming consistently. In my opinion, I think it is better to get out and switch to maybe in the banking side, maybe a stock like Indian Bank.
Indian Bank, got it. Well, the next one's on Geo Finance. Ajit, our viewer Ashish has actually bought it at 304. What should he do with his 300 shares? Is it a good time to average down?
So Puneet, in case if the view is short term, definitely I would not recommend averaging down, considering the overall market tone and its volatile swings also that the stock has experienced in the past. As of now, indications are in the favor that this decline may further extend in case if it fails to hold this immediate swing low close to around 224, 223. So that then probably maybe around 220, 215 is something the stock might test. So since you have bought it at higher levels, my recommendation is to wait and let the stock stabilize. In the interim, 220 should be your closing stop loss. In case of rebound, the first hurdle could be close to around 245 to 46. So around that area, I should review his position.
Okay. Ashok Reddy from Vijayawada wants to know whether should he continue to hold Quest Corp and Sterling Wilson Solar for long term for the next 2 years. Saurabh, any view on both the counters, Quest Corp and Sterling Wilson?
Negative.
Okay.
Negative on either counters. Got it. Well, the next question coming in, it's a space that's doing well today, the sugar space. And Neha from Bangalore actually wants to know 1 to 3 month view on these stocks. Ajit, does today's rally show some legs, or is it too early to call out this momentum as of now? Would you recommend that to enter Dwarkesh or Dhampur Sugar at this point of time?
So Puneet, we all know that the recovery or the move in sugar space is largely cyclical, and in case if you end up holding these counters for longer duration without any stop losses, you might end up holding it for several years. So in my opinion, it's prudent to avoid any fresh position in these counters. In case if somebody is looking for only for sugar space, then Balrampur is a better candidate. Means if you see that the stock is still holding up with all the major averages and very close to the record highs also. So comparatively, it looks better structure. So with stop at 468, one can look for Balrampur as a candidate in this space.
Okay. A caller query coming in from Ludhiana. Suresh, you can go ahead and ask your query.
Hello.
Yes, Suresh.
Hello. Good morning, sir.
Good morning.
I am holding the IRCTC shares at the rate of 804 last from 1.5 years.
And you can continue to hold this counter for more than 1 year?
Yes, I can continue to for more than 1 year. My question is whether averaging this stock can help me to exit in a some decent price when there is a recovery in the market.
Okay. Saurabh, should Suresh average IRCTC at current levels or continue to hold or just exit?
I would not suggest certainly to average it down, and in my opinion, I think he has bought when there was a PSU rally going on and the valuations were high. And in fact, even after the correction, I think the stock is still hovering around 8 times to book value, which suggests that the stock is still not that cheap. So maybe a hold would be a good option for him.
Hold on IRCT is what Saurabh would recommend. The next counter is Nalco, and Vani actually holds shares at 165. Ajit, she's holding 400 shares, so she's almost doubled her money at this point of time. Would you recommend exiting, booking those profit and taking it home? Is that something that you would recommend, Ajit?
So metal as a pack, Puneet, largely, some of these stocks like National Aluminium, Jindal Steel, JSW Steel, they have done exceptionally well, VEDL including that list. And the good part is that National Aluminium is still holding the ground, means during the corrective phase, the decline is nominal, and we're largely seeing more of time-wise correction instead of price-wise correction. So at least, partial profit definitely can be considered in case if this stock is a considerable portion to his overall portfolio, and maintain a trading stop at 340, which is the recent base now. So with that, she can continue. Next leg probably once, let's say we cross 410, 420 levels, then probably around 480, 500 is something that the stock might inch towards in the coming months.
Arvind from Mumbai is holding 2,000 shares of Canara Bank, bought at an average price of 160. He wants to know whether the share prices could touch around 180 levels by next year. Saurabh, any view on this?
On the banking space, Canara Bank in particular, good on valuation, and the strength is there on the balance sheet. Good stock to hold for the next 3-5 years.
Got the view. Well, Satyan is asking the next question to us. He is, of course, a regular viewer. Now, he's asking on Sirma, but we've already answered that. So, Hyundai is the other one. Now, Saurabh, we seem to be seeing a very corrective phase on Hyundai, right? All the way up from 28 to 2,900. Stocks now hit 1,771 today. What would your view be? Is it largely that the sales growth not being adequate compared to some of its peers is now having a hampering, and the momentum forward also doesn't look that impressive? Is that your read also on the stock? Because seems to be a considerable pain in this stock, right, for the last at least the last month or so.
You're absolutely right. I think there is a peer pressure in terms of volume growth, what Hyundai is experiencing. And moreover, the growth per se for the industry is also tapering off now. And now the commodity cost is also rising, and the fuel cost is also likely to rise after some state elections, the way the crude is moving up. And so there is a added pressure on the automobile space. I think it is better to get out from Hyundai in case you get an opportunity, and maybe park your money in the metal and banking space.
Has bought 50 shares of Jindal Steel at a price of 1,350. He wants to know whether can he add more at current levels for the next 2 to 3 months. Ajit, any view on Jindal Steel?
So like Sumit, we were discussing about metal counters holding comparatively well, and Jindal Steel also has retraced from its record highs, but still we are holding above its major averages on the multiple time frames. So this gives us comfort that probably around this area, close to 1,080, is something that the stock might hold amid this corrective phase. So you can continue to hold, avoid averaging at current levels, and in the next leg, a decisive break above 1145 could trigger the next leg of the up move. So around that area, he may consider adding in case if he wish to. But at current levels, he can continue to hold with 1,080 as a stop.
1145, a key level to watch out for JSPL according to Ajit. But Saurabh and Ajit, as well as the viewers, time off for the second round of the rapid fire in this edition of Fast Profit. You guys know the drill. First one's coming in from Dennis from Kerala on Tata Motors commercial vehicle. Saurabh, another counter that's now slipped below the 400 mark as well. Would you suggest buying now in this counter?
Avoid.
Neeraj is holding 50 shares of Dixon Tech, bought at a price of 10,200. Ajit, should he continue to hold this?
Yeah, hold with 9,200 as a stop.
ABFRL bought at roughly 254 by Lalita. What should he do with this counter, Saurabh?
Hold.
Ravi from Mumbai wants to know whether is it a right time to buy Max Healthcare for long term, Saurabh?
You can buy.
KPIT Tech bought by CJU at 655, Saurabh. He wants to know a 3-year view on the stock.
Negative.
Gunit from Mumbai wants to know the short-term view on Bajaj Finance, Ajit.
Short-term looks sideways, 770 stop.
Within the defense space, is it a right time to buy MTAR Tech, Saurabh?
Avoid, rather go for Bharat Electronics.
Sudhir is holding 195 shares of Colgate, bought a price of 2,213. Should he continue to hold this for long term, Saurabh?
Hold.
Edelweiss Financial, Ajit, we've not discussed this stock for a while, is what Shashi is asking. Should he buy into this counter now?
It do have support at 97, but wait for a sign of recovery. Buy only above 110.
Mahalakshmi is holding few shares of DLF, currently sitting on a loss. Should she continue to hold this counter for long term, Saurabh?
Exit.
Another huge performer, HUL, Saurabh. Our viewer wants to know if it's a good time to add now with almost zero returns for the last 5 years.
I think better go for Dabur or Marico.
Ramesh from Bangalore is holding 16 shares of Coforge, currently sitting on a loss. Should he continue to hold this, Ajit?
Just for a rebound with 1,050 as a stop loss and around 1,250, 1,300, review the position.
We discussed EPAC Prefab, Saurabh, but on Interarc as well, Anthony wants to know if it's a good time to buy for the long run.
Avoid.
Venkat Ramani wants to know whether should he buy Time Techno Plus at the current level for long term, Saurabh?
Avoid.
Amara Raja Ajit bought at roughly around 1036. What should Dilip do with this counter now?
Trend still looks negative. Marginal support at 640. So use recovery around 710, 722. Reduce your position.
Arjun from Bangalore wants to know whether is it a right time to buy Force Motors, Saurabh?
You can buy.
ACC bought at roughly 2600. Ajit, what should Priyanka do with this counter?
See, hold, but avoid averaging. Let the stock stabilize. So maybe close around 1200, we might find support.
And viewers, of course, standard disclaimer, the channel that you're watching is, of course, part of the Adani Group, and so is ACC, as we discussed right now. The next one that's coming in, it's on FEM Industries. Saurabh, I think we've discussed this before, but would you continue to have a positive view on the stock?
Yes, it's a hold.
Manohar from Pondicherry is holding 5 shares of L&T, bought at a price of 3,800. Is it a right time to add more, Saurabh?
Avoid.
IDFC First, is it a good time to buy, is what our viewer is asking, Saurabh. What would be your view?
Avoid, rather go for Bank of Maharashtra.
Raghav from Hyderabad is holding 40 shares of Varun Beverages, bought at a price of 420, currently sitting on a loss. Any short-term view on this, Ajit?
Use recovery to reduce 410, 420, strong resistance.
ITC Hotel bought at 194, Ajit, by Suman. He's actually asking if he should sell it today and buy it again in a couple of days. What's the momentum in the near term?
Momentum definitely looks negative. He can do so.
Got it. Well, that's the end of the rapid fire. Ajit and Saurabh, as well as the viewers, thanks so much for sending in your queries, and thank you to Saurabh and Ajit for helping us solve all of this, because we've solved a considerable number of 80 queries in this last 1 hour. A lot more stock related queries at 2 p.m. for the afternoon edition of Ask Profit. But viewers, all the time on this edition of the show, thanks so much for watching. KYC comes up next.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
बिटिया की शादी है हमारी।
बधाई हो, बधाई हो।
कुछ पैसे मिल जाते समय पे लौटा दूंगा। जिंदगी में जरूरत के वक्त हम अक्सर अकेले पड़ जाते हैं।
इसीलिए तो केपरी लोन्स आपको गोल्ड लोन देके अपना फर्ज निभाते हैं। केपरी लोन्स फर्ज निभाते हैं।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। केपरी लोन्स फर्ज निभाते हैं।
To understand the Tamil Nadu twist, join me in the midst of people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 Nifty ratio Saturday on Saturday.
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5 only on NDTV 24/7.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu. Here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me.
Hello and welcome back to NDTV Profit. You're watching KYC or Know Your Company. My name is Puneet Zaveri, and over the next half an hour or so, we'll try and put focus on that one company that is on our radar today. We've seen broader market correction, but Nifty Realty as a space has been hit the hardest, and hence a company from that index, a company in the real estate space, and we're talking about Marathon NextGen, a Mumbai-focused real estate developer, largely residential as well as commercial projects is what they operate, with a portfolio spanning across the affordable premium luxury as well as the commercial and the retail space. So you get the whole gambit with this particular company. Did turn net debt free as of Q3 of FY26 with a very interesting QIP that the company did of almost 900 crores raised back in June and July. That has had an impact on the shareholding of the company, and we'll get to that, one of the parameters, in just a bit. But a 5-year profit CAGR of almost 43% has been quite strong at this point of time, given the post-COVID rush as well as sustenance of the same as well. Profit have also expanded consistently post FY22, as I mentioned, and one of the biggest aspects was the merger of Marathon NextGen Township, which is effective of FY25, and hence there's a lot more to talk to the company about this. When you look at the primary products portfolio of Marathon NextGen though, the residential as well as the development as well as the affordable and premium housing is what the company operates in. So that has been a space that they want to earn, and it's very evenly balanced. In terms of some of the key projects though, Monte South in Baikala, the next zone in Panvel, which is a big, huge township that the company is developing, as well as new homes in Bhandup are some of the exposure that the company has in the MMR region, and that's Mumbai Metropolitan Residential Region for those who are new to this space. So this has been where you've had a decent uptick essentially in land costs as well as the price per square feet, and all these companies benefit from that. Amongst the other key project has been the Nirvana collection that the company launched back in November of 2025 at Panvel, almost a 600 crore gross developmental value, which essentially means the development potential of that particular land parcel. Amongst the segments where I've spoken about, revenue has been 60% or majority of that coming in from the residential space. You've seen roughly realization of almost 18,000 rupees per square feet. But look at the revenue mix for commercial as well, because you see a higher realization there. So 40% coming in from this aspect. And while it's not as stable as a residential project might be, given that you could go out and sell out a number of projects within a particular span of time, you might have to deal with renters amongst others. The realization makes up for it at this point of time. Now, very importantly is, and as I spoke about, the diversification, right? Commercial segment drives the higher realization as well as margin stability. But when you look at the diversified product mix, because of the townships in Panvel as well as projects in Bhandop, the affordable residential portion has now come to almost 30%. Now that's the blue bar down at the bottom. You are seeing roughly 24% come from the mid-size residential, and the commercial, which we spoke about a higher realization, is almost 26% of the company's revenue, with almost 20% coming in from the luxury space, where the company actually started out in Lower Parel, where they have a major commercial mix. So hence the realization and the meat of the margins comes from those commercial businesses. But in terms of the affordable side and the residential township side that the company has done, it's coming in from this residential side, which is almost 60% of the revenue. Move on and look at the key rating parameters now, because we have been talking about how important it is for a company like Marathon to give us some perspective on the income statement, balance sheet and cash flow as well. Now, you would be seeing that volatility across years for some of the key real estate makers, and hence what I would urge you to look at is the historical time frame that we're presenting, because those 3 years give you that perspective much better than that individual time frame as well. We'll also look at return ratios at this point of time. Along with that, look at the shareholding, which I've mentioned would change a little bit post the QIP. Street cred has been something that you and me are well versed with in terms of valuations, as well as the stock price that it has been impacted. Put some focus there as well as the operational metrics over the last 3 years, what have been the company's period at this point of time. The next part has been the first parameter that we look at, and that's income statement. Now, when you look at FY24 to 25, you see that variance I was talking about, but the 3-year CAGR, both for revenue, its EBITDA as well as profitability, has been quite decent, especially on the bottom line. So a 70% CAGR from the FY23 levels. We have hence given this company a thumbs up at this point of time. But the Q3 also a very, very interesting time, because you saw that impact coming in for Q3. Labor code was a big impact. So you've seen profits dip by almost 33%, and so has the EBITDA, with a marginal growth in terms of revenue. So in Q3, the company's booking number was also in the lower side, and hence the margins hit the lowest, which it has been, but has been consistent at the 30% range, and hence a lot more to go for the company at this point of time. In terms of the balance sheet, that has been the other aspect. Share capital is largely reduced, but the increase of reserves from 762 crores all the way up to 1100 crores gives the confidence in terms of what the company's strategy has been in the long term, while the total equity has also seen a substantial increase because of the reserves at this point of time. We continue to monitor the company's borrowing, and they have gotten net debt free as of this. So you are seeing a 560 crore number as of FY25. That's literally become zero for the company because of the QIP, and this was something that they had spoken about over the last couple of quarters in conference calls. The net debt free was one of their agendas and now has been achieved. Cash in bank has also remained quite stable at about 100 crores, and hence a thumbs up that we have given to Marathon NextGen also on this particular parameter. So that's 2 in 2. Does the cash flow give us that perspective also is the other key aspect I want to focus on, because cash flow from operations as well as is one of the major drivers from profitability as well, and here is where the variance of the company is. So in FY25, because there was the negative CFO, and it's largely also basis of what the company has been investing, you see that operations to PAT number largely been missing from here. But the company has been, in terms of the net cash flow, got back to the positive net cash flow trajectory. But because there has been that variance, a lot of new projects coming in on stream in FY27 amongst others, hence we have given this a neutral rating for now. A lot more to watch out for essentially at this point of time for Marathon NextGen within the cash flow side of things, and hence a neutral rating for now. Look at the return ratios though, and that gives you another perspective. It's better to look at a whole 3-year CAGR 13 to 14% is a decent number for a real estate company, as well as amongst other sectors that we look at. Of course, a much better improvement from FY21 levels, but within this time frame, and hence given this neutral rating for now yet again, has been the other factor in terms of sustenance of that and improvement from this. ROE is the other factor, very decent, of between 16 to 18%, and hence while the ROC might be a little lower at this point of time, you would expect a lot of investment made in townships amongst others, and hence a neutral rating on the return parameters as well. Shareholding is the other key factor. We've consistently highlighted that because of the QIP, you will see a big difference between the promoter shareholding between March as well as December. But what's interesting is the increase in foreign investments as well as domestic investors substantially between those 3 quarters, and a lot of that QIP effect you see across the parameter now. A 24% shareholding from the public is also giving you that confidence that retail investors have bought into the story. So for that, as well as the promoter maintaining about a 50% share, we have given this company a thumbs up. Future debt raises will be something to watch out for, because one more raise of equity will dilute this number further, as well as for the existing shareholders as well. So continue to monitor shareholding, but for now, given the historical evidence that we have, we've given this a thumbs up. Look at the street cred though, and here is where we've been talking about the disappointment that across the space, because of the Israel-Iran war, has started to hamper the company's share price performance. Amongst other key factors, along with Nifty Realty, has been the other key impending impact of down almost 31%. 1-year return is down almost 21%, but the 5-year return for the company, though up 5x, still the near-term underperformance has been quite constrained. And now with FY26 almost over, with the company yet to report Q4, you're seeing debt being pared down, and hence this could be a very interesting play going into FY27, and we'll quiz the management on that too. Valuations is the other factor. As for real estate, we try to look at the EV by EBITDA metric for these companies. You've seen roughly a 17 to 18% metric for a lot of these companies trading in that valuation. So Marathon, of course, Sri Lotus, a recent listing, while the Nifty Realty as a whole also trades at roughly around 20 times. So you're seeing Suntech also trading at almost 22 times EV by EBITDA. This one, of course, is something to watch out for. So it's not extremely expensive, and giving the correction gets you into a lucrative factor. Finally, in terms of operational metrics, that is the other factor. We've consistently highlighted that the area sold by the company has consistently increased. So has the booking value. We remain stable in FY25, but is yet to jump in back again in FY26. Pardon me. And collection been quite decent as well. Given this a neutral rating for now, to get some more perspective from the management in terms of the booking values, that will be something to watch out for in FY26, because we have seen the 3-quarter numbers has been quite decent as well. But go back to look at some of the key parameters as well as which we've spoken about, highlighting that the financial performance gives some perspective for income statement, which is a thumbs up for now. We've also given a thumbs up on the balance sheet, while cash flow and return ratios gives you a neutral rating for now. In terms of what we've seen the company's shareholding post the QIP, there has been a change in structure, a thumbs up here as well. Street credit, like the other real estate companies, has been down, so we'll continue to monitor that. But valuations as well as operation metrics give you some more confidence at this point of time. So overall, when you pull up the ratings, the company is trading at 5 out of 8 of the ratings for KYC right here on NDTV Profit. But important to get some perspective now from management. Mayur Shah, the Vice Chairman of Marathon NextGen Realty Limited, is now joining us to give us exactly that. Mr. Shah, a very good morning to you, sir. Thanks so much for joining in right here at NDTV Profit. My name is Puneet. Just the first question, right? Because we've seen Marathon transition continue to maintain in terms of the luxury space and now going into affordable housing as well. Give us some perspective of the company's strategy to have and go into townships at this point of time, and in terms of how that would change your financials, if any perspective, to start us off.
Good morning. Marathon has always been looking at a very balanced portfolio in every cycle of the project cycle, particularly luxury, commercial, outskirt township, and affordable segment within Mumbai. So we've been balancing that portfolio for quite some time, and going further also, we would like to balance it, because we are seeing a very strong push of infrastructure by the government in almost all the across Mumbai MMR. And we feel that luxury as well as affordable and outskirts, including commercial within city, is going to do very well in the next 3 to 5 years.
So how would you see the change? So because, we did pull out, Mr. Shah, the change between the metrics. So affordable continues to be at almost 30% of your portfolio. Residential is almost, the mid-size residential is almost 24%. Commercial is almost 26%. So how would that mix change with the townships coming in? Do you feel that the overall residential metrics close to 60% will increase slightly over the next few years?
Yes, but see, it depends on the cycle of the project also. Many times you have commercial projects start reflecting at the end of the project, because it's all sold in a ready inventory kind of a thing. So we'll be starting building a new commercial inventory in the next year and next 2 to 3 years. So more or less this would balance will be similar to what you are seeing right now on the screen, because of the affordable housing in the outskirts, where our portfolio Panvel is doing very well, and we really want to increase that portfolio to some extent. And also the Bhandup, where we have SRA portfolio, that also contributes towards affordable. These two, affordable housing has a very ROI is very high, and the sales velocity is much better than the luxury, which we have seen over the period of the time. So, we keep tweaking this, balance between the portfolios which we have in our whole micro markets.
So, two key questions now, Mr. Shah, from what you said, that you will be looking to rebuild your commercial portfolio yet again in the next 2 to 3 years, because a lot of your legacy commercial portfolio in Lower Parel has been doing very well, that your average realization also quite high. Where can we expect in terms of this commercial properties to come in? Will that be largely in the outskirts, as you mentioned, or will that be in these spaces where your realization has been quite high, because it is a very competitive market there? So what would be the strategy be there for the commercial portfolio? Which kind of areas would you want to be targeting at this point of time?
So we will be targeting commercial portfolio. A major portfolio will be within the city.
Okay.
We are looking at a central Mumbai type of development, very similar to our Marathon Future X type of location. We are also having like Millennium project, which is on the Mulund, on the next to touching to the metro station. So that type of inventory, where within the city, a good office space, small business space are also in demand. And thirdly, in the outskirts, we are looking at next zone. We are doing close to 1 lakh square feet of retail space of the completed. The phase 1 and phase 2 is already completed. Phase 3, we are looking at a large retail component in the 5 lakh square feet development. So we, office, retail kind of a combination, which would like to create for the next cycle.
And Mr. Shah, you also mentioned about how within your residential portfolio, your affordable portfolio also has a very high ROI. Your return on investment is quite high. The sales velocity is quite high. But what we've seen in the last 2 to 3 years has been that the luxury side of the portfolio for amongst the other listed real estate players also has been quite strong. The collections have been quite strong, has been quite robust as well. So when you talk about affordable over the next couple of years going through, is your strategy that you want to address areas where there is a higher potential of first-time buyers coming into areas where it's still untapped, because that's been something that the market hasn't yet rewarded yet in that sense, if you know what I mean, in terms of stock price performance, because the luxury one, much more stable in that sense. So could you give us some perspective for this rationale?
So luxury will continue. See, for our Monte South ongoing project, where we have already done Tower A and Tower B. Now we are already constructing in a very high speed the Tower C, which is 400 units. And we have a portfolio of a Tower D, another 1600 crore kind of inventory. So as and when we have scope available, we are again going to jump into a luxury residential. Even Tower C upper floor between 35 to 64 floors are yet to be launched during this year. So you will see luxury on a similar pace coming into our portfolio of the realization.
Okay, got that view, Mr. Shah. So you also had raised the 900 crore QIP in the last year. Roughly 340 crores was for debt reduction, which is now hampered. And so many congratulations for that, because you wanted to pay that off very quickly. Talk to us about the rest of the amount. What was that was, of course, for newer investments into new properties. Has that already been done? So is that 900 crores already utilized?
Yeah, for the debt part, as you rightly pointed out, it is already been utilized. The balance we are infusing as per our QIP statement into our ongoing projects. But we have set aside 300 crore for the new acquisition, which result we have been negotiating with various projects of redevelopment, JD, and all those things in particularly South and Central Mumbai, and a high value kind of a realization should be more than 40,000 square feet on carpet. We are looking at only those markets, and there you will see during this year we'll be announcing at least 3 to 4 very big projects to add into our GDV.
So is there any target? Because the follow-up question, of course, would be on your return on capital employed, right? Because your ROEs are quite strong. Because you're holding so much cash in your portfolio right now in your company, you are seeing the 13 to 14% range largely maintained until last year. So could we expect that deployment of 300 crores to happen in FY27, and hence any target ROC that you are maintaining over the next couple of years?
Yeah, see, thing is, the deployment of the funds are depending on the projects acquired, and then it goes through the cycle of approval and all. So we are very confident that within the next 1.5 years, we should be able to deploy the entire fund which we have now, as per the projects which are under negotiation. And definitely, you'll see those announcements. We are looking at least 4,000 crore of GDV to be newly added during this span of 12 to 18 months by way of these new acquisition projects.
So 4,000 crores gross development value over the next 12 to 18 months, got that view. How much of that would be coming in from your Panvel landscape as well? Because you've seen a new airport come in Mumbai, that's also coming in Navi Mumbai. And hence all those around areas, as well as CM Devendra Fadnavis talking about the Naina city coming in. So as a third Mumbai in that sense, you have almost 200 acres of land there. Could you give us some perspective of the development of the same, as well as a rough timeline of what could be the expectation, and how much of this 4,000 crores will include land parcels from there as well?
So for the Panvel phase 3 of the next zone, roughly 600 crore has already been launched, and that is under progress. The Nirvana collection, which we already are going through. For the Mumbai 3.0, there are very big plans of infrastructure development, particularly in our land bank, Panvel to Karjat rail connectivity, which is going on in a very high pace. And we expect that by 27 or latest by 28, we will have a local train going through Panvel to Karjat. And those stops of, Chikle, Mope, all those where these are the land bank which we are having, will be really accessible for something, similar happened between Kalyan and Ambernath, something like that. The development will take a very high pace. As on today, we are looking at some of the land bank coming into the development in 18 to 24 months by way of villa and plotted development. That is what we'll be focusing initially. But however, once this infra has been fully developed, like we have Sea Link already operational, airport Namia is already coming up full way. Some connectivity between the two airport, high-speed railway is also coming up, and all these infra which is been planned in a big way. I think will really bring these lands into a development in a fast manner.
Got it. So a lot of those, public infrastructure connectivity projects is something that you will take advantage of. Got that point. Mr. Shah, the way you're talking, it just feels like you want to stay in MMR. So would that be a safe assessment that you're not looking to diversify out of this region for now, given the potential that you have also on realization and growth? Would that be a fair assessment?
Yes, very much. Because we at Marathon treat Mumbai as almost 19 to 20 different micro markets. And if you look at MMR's sale data for the last year, almost 34% of all India sales happened in Mumbai MMR region. Almost 1.6 lakh units are sold in Mumbai MMR. And if you look at even the inventory, is only 20 months inventory remaining. With huge infrastructure push, if you recollect today morning only, government has announced a very big push of transferring almost 80,000 acre to the MMRDA region to push 3 lakh crores of infra projects, where 300 kilometers of metro, multimodal, all entire coastal ring road, and all outskirts area to be very well within 45 to 50 minutes to the central Mumbai is something which has been the vision of the government. And with this in mind, I think nowhere in the world such kind of a huge infra push is happening. So we would really like to be taking advantage of all our land bank situated whether in Panvel, Dombivli, Bhandup. All these land bank will be much better utilized within the Mumbai. And we really feel Mumbai MMR is going to be growing faster than all other cities.
Well, Mr. Shah, we'll have to leave it at that. Thanks so much for joining in. A lot more questions on cash flow amongst others probably in our next chat. But hopefully, best of luck for your quarter 4 results. Look forward to our next conversation. But thank you for joining us today.
Thank you. Thank you very much for having me.
Well, that was Marathon NextGen. A lot more, in the next 12 to 18 months, almost 4,000 crores of gross development value to watch out for. But viewers, that's the end of this time of KYC. Stay tuned. A lot more action on the other side right here on NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 Nifty ratio Saigal. What's Saturday? How to
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Saigal, on Prime 5 only on NDTV 24/7.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu. Here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
New Year.
Nifty continues to sulk on the last trading day of the financial year, hovering above 22,400 as weakness persists in the market. Crude surge and geopolitical uncertainty looms on Dalal Street, with all the sectors trading under pressure. Rupee opened the week in green, recovering sharply in early trade after regulatory intervention aimed at curbing banks' currency exposure. The turnaround follows a directive issued by the Reserve Bank of India, which placed a cap of $100 million on the net open position that banks can hold overnight. Sugar stocks surge as rising oil prices make ethanol more profitable. Global supply tightens and investors rush into a rare pocket of strength in a shaky market. Coal India subsidiary Central Mine Planning and Design Institute lists at a discount of 7% to its IPO price on the stock market. Now, the initial share sale was subscribed almost 1.05 times. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Poddar. Let's take you through the market. Extreme pressure being seen on the Indian markets, and that's on account of two factors connected to each other. First, of course, no sign of de-escalation of the Middle Eastern tension, and what that means for India is always crude oil prices, higher prices of that really putting pressure on the Indian market because it'll have a wider economic consequence. And that's where Brent crude holding at $115 per barrel is very bad news for India. And that's also putting pressure and also making the FIIs nervous. So therefore, that pressure really showing on Nifty 50, 22,500 odd levels, struggling to stay at above 22,500 levels, 1.3% down in trade. But if we really look at all the sectoral indices, barring a handful with minor greens like metal index as well as oil and gas, it's most of the sectors under extreme pressure and selling pressure. When we take a look at the banking sector, that's really underperforming the key index by a huge margin, over 2.5% down in trade. And remember, the banking space, the sector and the index is a quasi-investment into the economic prowess and strength of the country. And therefore, banks losing steam and underperforming is showing the worry that the market has. IT sector too is lower in trade. PSU banks take a bigger hit. Nifty energy is in the green by a small margin. All right, let's take it straight across to Sonam Srivastav, who's the founder, CEO at Right Research, joining in. Sonam, a pleasure, having you on NDTV Profit. It is a very weak day in trade, several uncertain factors, as well as crude really showing that pressure on the Indian market. How does one really tread in this kind of market condition?
Yeah, I think it definitely is a tricky situation right now with the geopolitical crisis in place and no solution coming out as of now. And, I think escalating news of maybe boots on the ground from the US or closing of the Strait of Hormuz and the related, the other state as well. I think that is putting pressure. That's what has led to escalation in the Brent prices. And the only resolution here would be some sort of ceasefire that comes in place. And I think we can see that today, therefore, you're seeing a movement